focus on this. And so what we want to do is think about, okay, how do we make sure we get the returns we want for our clients, but also protect them against what we could see that we haven't even had to think about? As Powell says, we don't even think about thinking about it, inflation. So do you look at your portfolio and say, if I need a certain outcome and I can't afford mistakes, am I prepared for this possible mistake? Well, it's not a mistake now, we want it, but the inflation side of it. So yes, we're still aiming for high returns. Yes, we still think we can achieve them. But in addition to that, we also want to make sure we don't take our eye off the inflation ball, which hasn't been with us in a long time, but it could come back.
Rebecca, what do you do with something like euro, right? The strength in euro could be problematic for the European Central Bank, and they're kind of navigating on how to handle it because they can't target it, but of course it has an impact on inflation expectations and all of that. Are we looking at a possible currency war on our hands?
Yeah, Francine, I think that's a really good question. With the Fed kind of threw out the opening salvo by changing how it's interpreting its mandate, aiming for 2% inflation over a cycle, aiming for maximum employment. And it'll be great to have Bostic here on your show later today to talk more about that, especially the employment part. So when the Fed did that, all else equal, it probably pushes down the US dollar. But we all know currencies are pairs, so all your other currencies are going up. But who wants a stronger deflationary currency right now? Not many places. So Europe obviously has started some very benign verbal intervention to talk down the euro. It needs to do more. It's doing its strategic review now. It's going to come out next year. It would not surprise me at all if they follow the Fed, almost because they have to. They can't afford to have that euro weighing on their economy, especially given what large percent of GDP is exports for them. Again, I go back to, though, monetary can't do it by itself anymore. We're in a world where fiscal and monetary have to work more in coordination. Well, so you've got to get the fiscal stimulus from Europe. That's a tall order for them.
Okay, Rebecca, we are out of time. Thank you so much. Generous of you to be with us this morning. Rebecca Patterson of Bridgewater. Futures flat, Dow futures down 53 as well. The VIX 26.22 on the VIX. Please stay with us. This is Bloomberg.
Decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas, un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. In Spain, a takeover will create the country's largest bank. CaixaBank is buying Bankia in an all-share deal that values the state-controlled lender at about $4.5 billion. Signs that the long-awaited financial industry consolidation in Europe is starting to kick off. The Trump administration wants information from gaming companies about data security linked to China's Tencent. Bloomberg's learned that the Committee on Foreign Investment in the U.S. has sent letters to companies such as Epic Games and Riot Games. They want to know about their protocols in handling Americans' personal data. Tencent owns Riot and has a stake in Epic. And that is your latest Bloomberg Business Flash. Tom, Francine.
Rutika, thank you so much. Now, your data is a little bit, I would say, less exciting than usual, certainly than it's been in the last couple of weeks. If you look at European stocks, they're pretty much fluctuating. Investors seem to be waiting for some catalyst. So for the moment, we're range-bound, certainly when it comes to some currencies and certainly when it comes to, Europe. There are stocks that are falling, Tom, amid reports that certain countries in EU, especially Britain, will extend curbs after clamping down on social gatherings of more than 6 people, Tom.
Well, it will be interesting. Coming up, with an opinion on the election, with an opinion on our political economy, Jeffrey Sachs of Columbia. This is Bloomberg. Good morning.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg First Word News. Congressional Democrats are weighing their next steps after President Trump backed a bigger stimulus plan. Some are keeping pressure on House Speaker Nancy Pelosi to bring a new coronavirus relief bill up for vote. Pelosi says some lawmakers don't want to advance any legislation until they have an agreement with the Trump administration. And President Trump announced $13 billion in new farm aid at a rally in Wisconsin. The move had been widely anticipated. Wisconsin is a farm state that's critical to the president's chances. He's trailing in the polls there. And Joe Biden is drawing a sharp contrast between his middle-class upbringing and President Trump's wealth. The Democratic presidential candidate was making a plea to voters in the crucial state of Pennsylvania, where he was born. Biden returned to his hometown of Scranton for a CNN town hall meeting. He said he views the campaign as a campaign between Scranton and Park Avenue. The Federal Reserve may extend the unprecedented constraints on bank dividend payments and share buybacks. The Fed says it will decide whether to prolong the limits in the next 2 weeks. It's now conducting stress tests. Regulators imposed the cap in June. At the same time, the Fed said there were potential risks to banks if capital distributions continued at the same pace. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Francine, Tom.
Rishka Gupta, thank you so much. Challenges for each central bank. We certainly see that with Turkey now blowing out to 7.56. Russia tries to keep things contained. They have some stability in their central bank. Headlines is now, and then there's a headline. It's a headline Chairman Powell would like to see. Inflation lately somewhat above expectations. That from the Russian central bank. Is every central bank into October is challenged by this pandemic, no more than Russia as well. Right now, a real celebration. It's a virtual celebration. I was thrilled to see Michael Mann was involved, truly my favorite, on climate change. The Bloomberg Green Festival. It is a week-long event of real people, including Bill Gates on his wheelhouse. That was great to see as well. Any number of good guests, including Cisco leadership and from ENEL Group as well. Stay with us. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
He knew how deadly it was. It was much more deadly than the flu. He knew and purposely played it down. Worse, he lied to the American people. He knowingly and willingly lied about the threat it posed to the country for months.
Good morning, everyone. We welcome all of you. Tom Keene in New York, Francine Lacroix in London as well. And we hear from Vice President Biden there. Francine, I can't convey to our global audience enough the uproar over science in America. The way to drive this conversation forward is to speak to the economist who does more to link science with economics than anyone of his generation. You may love him, you may hate Jeffrey Sachs as he speaks his politics, but one thing is certain, at his Columbia University, his commitment to the environment and science has been steadfast. We're thrilled he joins us, the author of The Ages of Globalization. Jeff, I don't want to get all fired up about the political campaign, but I want you to inform people of the underlying threat to science from modern populism. It's not just about Dr. Redfield, is it?
We've had an assault on science that goes back at least 25 years in this country in its very intense form. It started around environmental issues because the polluters didn't want to hear about environmental regulation and environmental threats. So when it came to the ozone level depletion, acid rain, and of course the big one, climate change, there was an absolute rabid attack on science, and it got into Congress, unfortunately, closing down the science advisory group that was advising Congress on science, the Office of Technology Assessment. Newt Gingrich did that in the mid-1990s. That left Congress blind to the science. And when we hit the COVID-19 pandemic this year, and we had the shocking disregard or disdain for the scientists by Trump and the administration, I spoke with the leading senator and was just forlorn and asked him, what is going on that we're not listening? This was back in March, and the deaths were starting to mount. And he said, Jeff, this has been an assault for decades. And what we're feeling now is the consequence of that. This isn't something new. This is something that has been building. But Trump took it to an extreme that we've never seen before.
Jeff, I want to synthesize here your life work. And full disclosure, I've done a lot of work with Dr. Sachs over the years on any number of Saxian themes. Jeff Sachs, in your wonderful book, The Ages of Globalization, you speak about digital age at the bottom. I've been using the phrase digital dominance. In defense of conservatives like the president, they're frightened by the digital dominance and the gains to the elite. How does President Biden speak obviously to Democrats, obviously to liberals like you, but how does a President Biden bring in conservatives scared stiff about the digital dominance outcome?
Well, I think what is true about technology in general is that it has benefits for society, but it can have many risks. I'm not sure that Trump represents that, so I want to put that aside. But for people who are concerned about the digital age, they're right to be concerned because it has many potential downsides, and those need absolutely rationally to be addressed. The downsides include loss of privacy, they include surveillance, they include cyber warfare, and they include income distributional effects. We can see it in this pandemic that those who live online, so to speak, for work have done well. Those who own the digital world have seen wealth soar during this pandemic, where people out in the brick and mortar economy have suffered terribly. So technology matters and it changes things. And if we are addressing this openly and ethically, we take measures, for example, that there should be access in rural areas as well as urban areas so that everybody has access to digitally enabled broadband services. And that becomes a public policy, like in the 1930s when Franklin Roosevelt pushed for rural electrification so that electricity didn't become the divide of the age.
Right.
Smart policy. And that's the kind of policy that we need.
But Professor, I mean, I've lost count of the number of times that we've had politicians come here and say, actually, the pandemic is an opportunity to reset our economies, to, change how much technology is available and to change climate change. So invest much more on green bonds and green financing and focusing on sustainability. Are they just talking or are they actually doing it? I don't know whether, we're far enough in the crisis that you can rechange our fate a little bit, or whether they're still trying to deal with the pandemic.
Well, consider the fact that we're hit right now by 3 huge environmental crises. One is the pandemic itself, which is a so-called zoonotic event where a pathogen went from an animal species, horseshoe bats, to humans because of degraded environment. The forest fires on the west coast of the United States, which are a shocking demonstration of the harms of climate change, and Hurricane Sally, which has just completely flooded the Gulf of Mexico. And we're seeing more and more floods, rising sea levels, more torrential rains, also the result of climate change. So we'd have to be completely uninterested in our survival not to be doing something about it. Unfortunately, Trump and the Republican Party have really operated for the sake of the coal, oil, gas industry for decades. They've brought us to this point. What we need to do, and what would help the whole country, is to invest in a strategy to have wind and solar energy, to have a new generation of vehicles that are electrified, which are going to be the low-cost, best vehicles possible, to build new industries on the basis of that. And if we did what those politicians coming on the show say we ought to do, we'd actually be employing people around the country. The whole country would be working together to build a safer and smarter and better America, higher productivity and a safer environment. So it can be done. It's happening in some states here or some states there, but when you don't have federal leadership, when you have a president like Trump moving in exactly the opposite direction, completely anti-science, and he says, oh, it's going to get cooler, just like he said the virus is magically going to go away. If we live in that fantasy world of Trump, of course we're going to end up with complete destruction, which we're seeing on all sides right now.
Yeah.
So this is really the point. It hasn't happened in this country in an organized and scaled way because we haven't had the federal government and the presidential leadership to have it happen. But it should. Of course it should.
How many jobs do you think, the focus on sustainability or combating climate change, green financing could actually create in the U.S.?
The estimates are that it would create, on average, 2-3 million jobs a year, because we would be building new transmission lines, new distribution grids. We'd have a supply chain for advanced batteries. We would be retooling so that we have a hydrogen-linked economy for heavy industry. We would have electric vehicles. In other words, there are many, many sectors involved in the kind of safe, more productive economy that we want. Instead, what Trump did was double down on saying, I'm going to restore the jobs in the coal sector, in oil and gas, and there are hundreds of thousands fewer jobs in manufacturing now than when he started, and fewer in the mining sector. So it didn't work, his strategy. It was trying to restore the 20th century.
One final question to Jeff Sachs, political operative. We love that, with Columbia University. Jeff Sachs, I want to know what liberals need to do to assist Joe Biden in the 46 days ahead. What does the liberal agenda need to do to support this guy running for president?
Well, I think a liberal agenda needs to make clear that it's for the benefit of all America. We need to stop this battle between the states, between the red states and the blue states, as if our country is going to work by one part of the country battling another part of the country. We tried that. It was devastating. We need to have a strategy in which all parts of the country are working together for a better America. And I think that that is the sustainable development strategy. It's a strategy that is fair for everybody and that puts everybody back to work, really building a better country. And that, I think, needs to be the message, not that it's going to be one part of the country winning by a small margin over another part of the country, but that we really are all in this together. And that's the truth.
But do you believe, Professor, that actually this vacuum, right, that was left by a lot of, politicians and the U.S. administration has been filled with private companies? I know you're involved in many, private partnerships, I guess, in trying to do more with climate change. Can it ever really take over the vacuum left by politicians?
The problem is there are trillions of dollars of investment sitting on the sidelines right now saying, which way is our country going? Or is it going in any direction other than in circles? So the private sector would like to invest, but there needs to be infrastructure. Where is the transmission grid for renewable energy? For all that incredible high-quality wind power in the U.S. Midwest, for example, or the solar in the U.S. Southwest. How is it going to get to population centers? You need interstate transmission. You need public policies to do this. People say about electric vehicles, where am I going to charge it? Where are the charging stations on the interstate highways? Where is the infrastructure for this? So if you want private investment, you need to have the complementary public investment alongside. You can't have the private sector battling the government. They have to be working side by side. Public investment, private investment. Then we're going to get somewhere.
Jeffrey Sachs, thank you so much for joining us today. Of course, he's professor at Columbia University. Now, up next, Dr. Andrew Pekosh. He's from Johns Hopkins University, Bloomberg School of Public Health, where he's professor and virologist. We'll continue tracking COVID-19. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Andrew Pekosh. He's Johns Hopkins University Bloomberg School of Public Health professor and virologist. Professor Pekosh, thank you for joining us on Bloomberg Surveillance. I mean, we're almost approaching, in the U.S., 2,000 COVID deaths. It's a pretty grim landmark, but what does it tell us about how this virus has been, changing and moving through the U.S.?
Well, these numbers that are coming up are relatively high, particularly compared to other countries that have been able to control the COVID-19 outbreaks and get their case numbers, those are daily case numbers, down to much more manageable levels. What we're seeing also across the country is hotspots flare up, and then they settle down into lower numbers of cases, and then other states come up in terms of there being hotspots. This is expected. This virus is not going away. It's present within our community. As one relieves some of the public health interventions, you expect to see some cases coming up. This is where, though, the testing and the contact tracing mechanisms that should have been put in place would be able to be called upon to try to limit the spread of the virus, to identify specifically the people that are at risk for infection based on exposures, and try to quarantine them so that the interventions that are needed to lower the virus spread can be more targeted, as opposed to being across the entire state, across the entire country.
Because the U.S. is so vast, do we need to look at it differently to almost any other country because a lot of the precautions or not are taken at state level? And what can you tell us about some of the Midwestern states, North Dakota, South Dakota, and Iowa, which, increases are quite significant there?
Yeah, absolutely. I think, public health is best done at the local level, and cities, counties, states are the ones that really have to fine-tune policies to make sure that they're being optimized to what's going on within those particular regions. That's not to say that national leadership isn't important, because it absolutely is. One has to provide the framework, one has to provide the resources for the states, the counties, and the cities to be able to effectively institute the public health measures needed to reduce COVID-19 spread. What you're seeing, though, is a very different response to the COVID-19 outbreak based on the state in particular that you're in. Some states take this incredibly seriously and institute rather strong public health interventions early on. Other states try to take other approaches that allows for more virus spread in the community. That's the drawback of having the local public health entities make some of these decisions, is sometimes those decisions are not solely driven by public health, but they can be driven by political influences.
Can we avoid a second wave, given that we're going into the winter months and that schools are reopening, people are going back to work?
Yeah, I think it's absolutely possible to avoid a large second wave. We know the public health interventions, the contact tracing, and the testing, and we have a good sense of how those things can be applied. We've seen multiple countries be able to control levels of COVID-19 in much more manageable levels. We need to have the public as well as the government commitment to institute these types of interventions to make sure that we can keep case numbers low. The winter months may bring a surge of not only COVID-19 because people are being inside more, they're coming in close contact with each other some more. We're also seeing other respiratory viruses that may be making an increase this fall and winter. So all of these things really highlight the fact that we need to spend the time now to make sure that the public health interventions that we want to put in place are there and that we can effectively monitor and keep case numbers down as we move into the winter months.
Andy, very quickly, would a second wave be less deadly?
Well, the medical infrastructure around the world, but particularly in the U.S., has really learned a lot about how to care for COVID-19 patients. So certainly I think the outlook for severe cases is looking much better. You can see the death rates are dropping across the U.S. as physicians have learned what treatments work, what treatments don't, and what time to institute those treatments. So I think we're getting better at that, but that's not to say that we shouldn't focus on reducing the number of cases, because the fewer cases that come to hospitals, the better the care is going to be for those people, because it's going to be less of a stress on the medical infrastructure and the limited resources that we do have to deal with this.
Andrew Pekos, thank you so much, of Johns Hopkins there. And be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up next, join Tom King, Jonathan Fair, and Lisa Abramovitz for more Bloomberg surveillance, simulcast on radio and TV. This is Bloomberg.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
Cybersecurity sector obviously is no secret that it's probably going to do very well in the next 5 to 10 years, say.
2020 has already surpassed previous years' funding, in digital health in particular.
I personally prefer to buy businesses that make money, and if you can buy them that are unlevered, that just means they're even cheaper.
quality has been deteriorating for several years, but it's been really, really bad during this crisis.
This V-shaped reaction or V-shaped recovery is not going to happen.
Inflation could come back faster and harder than anyone's expecting.
As much as I appreciate everything the Fed is doing, I'm not sure that they have the tools to really let inflation rise.
Austerity doesn't work. You can't shrink your way to growth.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. This Friday morning, equity futures going absolutely nowhere. Tom Keene, after some jitters in the last 24 hours, just a little bit of stabilization for big tech.
A huge stabilization for big tech as well. Green up on NASDAQ, Dow a little red, S&P flat, I'll call it, John. But there's two stories. One is off the radar. Turkey just crushed here to new weaker lira. But, John, to me, the story, which you and Lisa have both mentioned time again this week, and particularly since the Powell presser, bonds are going nowhere. They've truly hit, that range thing, that thing, yield curve control, it's here.
Range bound for 10-year treasuries. I'd go further, Tom, in high yield, resilient, triple C's, the riskiest part of junk debt. Lisa, no doubt, will talk about that later. Still rallying. Outside of that, Tom, parts of the equity market's doing well. Materials absolutely surging off the March low. Not really disrupted by what's happened with big tech. It's just one segment of the equity market, really, Tom, that's faced some severe headwinds over the last couple of weeks, and it's the big growth story.
Oh, a mystery into Friday, and, of course, a mystery about growth forward. Growth right now, John, I'm completely distracted, folks. Lisa, you're going to have to save me here. John, we need an update. Gareth and Sergio over the English Channel right now. This is exciting.
Gareth Bale.
Gareth
going
and Sergio.
To your tots. I've got a much bigger announcement. A much bigger announcement. Drum roll. I think we've got an Abramowitz birthday, Tom Keene, today. She kept it very quiet. I'm pretty sure it's a happy birthday for Lisa Abramowitz.
Well,
Happy birthday, Lisa.
Thank you. And I know that the pound is too strong to expect a gift from you, John. But that said, I should have probably told you.
I know, I'll do my best, though.
Yeah, I understand. A pair of socks, great. A Hermes tie, perhaps, Tom, from you. And depending on what this consumer sentiment survey that's coming up at 10 a.m. today shows, perhaps you will feel...
transition.
Thank you. Thank you very much. I practiced that. Tom, you'll be deciding whether or not you have the sentiment to buy me a gift. We'll be getting that at 10. Very interesting to see whether it's shifting. He's going to pass while he gets some more iPads and AirPods for his dog. Meanwhile, also today, we're getting a lot of Fed speak. The Fed's Raphael Bostic speaking twice. We're going to be hearing from him in about 90 minutes' time with our own Michael McKee. Also going to be hearing from Jim Bullard and Neil Kashkari. And also today, I love this title.
Come on.
What?
Do you buy this quadruple witching stuff?
Hold on a second. Let's just first say quadruple witching. That is when the expiry of options and futures in 4 of the major stock categories all expire at the same time. And there's a lot of volume. And a lot of people are focused on this, Tom, because of how elevated options trading has gotten, particularly in the big tech.
Maybe. John, do you buy this stuff, this whole quadruple stuff?
Don't you think we give her a break?
No,
it's okay. No, they're not going to give me a break on my birthday. Really?
Lisa's first surveillance birthday. Tom Keene sings happy birthday when we have a surveillance birthday. Tom, take it away. Yeah, just sing us a little tune. Come on. Oh, beautiful. That is beautiful.
Yeah. This is like a dirge.
Have you got more? Can you do the next line?
No, Gareth and Sergio
just repeat the first
Gareth
line.
and Sergio just entered English territory. Okay, the Armada's coming.
I'm going to get to the
Spanish Armada's coming.
If that's okay.
Please.
This Friday morning, shaping up as follows. We'll get it together, I promise you. Equity markets going nowhere on the S&P 500. In the FX market, euro-dollar 118.40. We head south by just 0.1%. Tom said it. It's true. We've been there for the last couple of weeks. In fact, the last couple of months. We are slap bang in the middle of the trading range since early April. 70 basis points, the midpoint between the high end of the range, 90, the low end, 50. 67 basis points is your yield on a US 10-year. The story of the last 3 weeks is just the jitters around big tech, and they have not gone away. Joining us now is David Balin, Citi Global Head of Investments. David, your thoughts on what we have seen in that particular segment of the equity market, a rather large segment of the equity market, in the past 3 weeks?
Well, at its peak, the NASDAQ was up 40%, and during its correction, it went down about 11% and was 29% up for the year after that. So it's hardly a major correction. I think what we're seeing now is a focus on the future, and as a result of that, as we see treatments for the for the virus come, ever nearer, we're going to see a rotation of this economy and focusing on, as you've already talked about this morning, materials and ultimately small and medium-sized industrials, and then finally the emerging markets. The closer we are to treatment, the more we're going to see a rotation into cyclical stocks, those that indicate sort of the next phase of this recovery. And that's why I think you're seeing some tech jitters. They've done extraordinarily well. They're extremely highly valued. And of course, they've brought in, really the next 3 years of revenue to this year as a result of the virus and the huge benefits that technology companies have brought to the economy.
But David, the key question here is if we rotate, and I think everybody agrees it's feasible, is it a rotation on an absolute basis or a relative basis where tech participates even with the rotation?
Yeah, I think that is the question, Tom. And the answer from our standpoint is that it actually doesn't. Let's assume, for example, that the S&P was up 7% next year. You might have tech give back a small amount because, again, they're not going to lose a lot of share here, but you're going to see the other sectors rotate and do far better than the average. So, what we're advising our clients to do right now is to actually cap the amount of technology, cap the total amount of tech, media, and telecom in their portfolios, and begin to deliberately rotate into these lesser valued areas now, anticipating what we just talked about.
Which is the area most attractive?
Well, from our standpoint, when you have materials rising but industrials aren't, it indicates that the companies that are going to have, basic increases in value and profitability are the ones to really focus on. And they're, 15 to 25% down from their peak. We can identify them across many, many industries. And once we see normal consumer behavior, we can see an enormous amount of increase in profitability and even dividends for some of those stocks.
David Balin, you seem to be chiming in with this growing consensus that we're entering a new bull market. And I'm struggling to understand how coherent this buildup of debt that we're seeing, this record buildup of debt this year, is with a new bull market. What's going to drive the gains in years to come?
Well, to answer your question, the market can afford this amount of debt because of the interest rates you've already talked about this morning, right? With them being extraordinarily low, the ability to carry that debt, I think, is absolutely sustainable. And second of all, we have an extraordinary amount of stimulus that's taking place, somewhere between $10 and $12 trillion, 7 to 8 times the amount that was spent in 2008 and 2009. That has residual impacts. If you take a look at consumer spending as of last month, it was 2% above what it was in December of 2019. Take a look at housing data in the United States. Take a look at consumer spending, by the way, in Asia, the same thing in China and Greater Asia. All of that indicates that we're already going to get to escape velocity before we actually have a cure or treatment for the virus. So there's a lot of reason to believe that the stimulus, the fact that we can afford the debt that's outstanding, and consumers, actually being freed to do what they want to do, will actually give us quite a robust recovery in 21 and even into 22.
I remember Governor Carney talking about escape velocity back in 2013 here in London. And David, I just wonder, can you explain what escape velocity is and why you think we'll get there so much more quickly than we did after the financial crisis?
It's a great question, and this is so different than the financial crisis, because the financial crisis, it took 14 months to get the appropriate government responses. Here, the actual response to the crisis, and this is a rarity, took place in advance of the crisis taking place. In other words, stimulus was brought to bear immediately once people saw that we were going to have to shut down industry in order to have, a response to the virus and mitigation. So once they did that and they actually began passing this, and this was a global phenomenon, it happened in Singapore, it happened in Hong Kong, all over Europe, even most recently just a month and a half ago in Europe, you're seeing an incredible amount of response, understanding that the economy could be severely damaged. That did not happen last time. So when we talk about escape velocity, there was no official number for it. If we could imagine GDP growth of somewhere between 3 and 4%, in developed markets globally, more than that in China, that clearly would make it, to a point where the economy could really accelerate and do that, as I said, for about 24 months.
Bond markets don't seem to be buying that story, do they, David?
No, they don't. And Lisa, that to me is the story that's why we've told our clients we want them to reduce their exposure to bonds as well. I think there's a lot of risk in the bond market right now for investors, a lot of complacency. Remember, we were at 1.9% on the 10-year last year. We're at 67 basis points today. There is no reason in the world why a 10-year bond could not be at 1.25 to 1.5 next year in the event we get the kind of pickup that I'm talking about. And at that point, you have a steepening of the yield curve, which happens to be good, by the way, for financials and insurance companies and the like. But you have a very, very different portfolio construction. And so we want our clients to rotate away from, these very low interest or no interest bonds in the case of our European investors. We want people to be very, worried about, triple C and other credit instruments that, are rallying now, but they're rallying for the wrong reason, right? They're rallying because people are seeking yield. And there are far better ways to get yield than to do that, in my mind, at this point in time.
David, great to catch up, as always. David Bailey there of Citi on this market. A fascinating couple of weeks, I've got to say.
Happy birthday to you, Lisa.
Thank you very much, David.
And I say that also because it's a big birthday. It's on Rosh Hashanah.
Indeed, John, pick it up.
Lisa, you're going to be spoiled this week, this Friday.
This week.
If I'd known this Monday, we would have built up into Friday, which is probably
the reason why I didn't tell you. Yeah, exactly. You pretty much nailed it. Although I should have, because...
On credit.
Yeah.
On credit, Lisa, just quickly.
Carry on.
High yield, triple C, just to get to the business end of the conversation before we have to go. Triple C rallying and rallying and rallying as growth falls apart. And Lisa, I've got to say, credit's looking firm. It's looking okay. The supply this week in the primary market, both on the high yield and investment grade side, financial conditions still loose.
Lisa Hornby nailed it yesterday when basically the Fed is saying, we are going to support you to buy risk. So why not buy risk? I guess the why not is if companies go bankrupt, but that seems to have slowed down, and there is the sense that if they don't go bankrupt, you can at least pick up a coupon. So it seems like there is an asymmetric risk right now, John. You either can pick up a coupon or get blown out of the water. It's one or the other, and people are going to risk getting the coupon for now.
I'm herding cats this morning because I know what's coming up every single segment. It's Gareth Bale and Tom's Tots. And I'm just going to have to manage it through the next 2 hours.
Do you want to explain to our American audience why this is so exciting?
Where's Gareth?
No, the answer is the Tots are so bad. The Tots, they almost lost to like Bulgaria last night or something. That what are they spending on this, John? This is like ginormous money, isn't it?
Well, I don't know the financial details of this yet, Tom. I understand that it's going to be a loan deal initially, and that your man Gareth Bale is flying over from Real Madrid.
I'm a loan deal.
And could be signing with Spurs. Can we send you back somewhere then?
Good morning, John.
Go Gunners.
Good morning to you all from New York and London. This is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. The Chinese owner of TikTok is gaining confidence that Beijing will okay its proposed alliance with Oracle. China has asserted its right to block the sale of critical technologies, but Bloomberg's learned it's likely to greenlight the deal as long as it doesn't involve the transfer of artificial intelligence algorithms. President Trump is ridiculing FBI Chief Christopher Wray. Wray told Congress that Russia is trying to hurt Joe Biden's presidential chances through social media and influence operations. The president tweeted, quote, "Chris, you don't see any activity from China, even though it is a far greater threat than Russia. Makers of the leading coronavirus vaccine candidates are making their trial plans public. The moves by Moderna and Pfizer come after increasing fears that the effort to develop a vaccine is becoming politicized. The drug makers are disclosing information about late-stage trials and how they plan to gauge their shots' safety and effectiveness. And the British government says a round of informal trade talks with the European Union were useful. Meanwhile, European Commission President Ursula von der Leyen tells the Financial Times she's convinced a Brexit deal is possible. All that's a stark contrast to Prime Minister Boris Johnson's actions in recent days. He wants to tear up sections of the deal he reached less than a year ago. And in Spain, a takeover will create the country's largest bank. CaixaBank is buying Bankia in an all-share deal that values the state-controlled lender at about $4.5 billion. Signs that the long-awaited financial industry consolidation in Europe is starting to kick off. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
We never thought COVID-19 is going to hit us. But now, looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the GBA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have a second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Seen Donald Trump try to convince the American people that they should question the integrity of our election system. And so it starts with the highest office in terms of doing everything we can to make sure that every person who has a right to vote has access to the polls.
Kamala Harris there, Democratic vice presidential nominee. That's the message coming from Team Biden going into the election just a couple of months away. Here's the price action, 2 hours and around about 12 minutes away from the opening bell this Friday morning. I've got to say it's a quiet end to the week, at least so far. Equity futures up 4 points on the S&P 500, just about holding on to a weekly gain. We advance a little more than 0.1%. Euro dollar, not much of a story here. Euro dollar basically unchanged at 118.39. And perhaps the story for treasuries is that there isn't one. Range bound, 0.67% on a US 10-year, Tom.
Watching the 10-year yield, it's weaker today, but it's just been, as John says, in a range. Not in a range is our Kevin Cirilli, our chief Washington correspondent. Kevin, there's like 8 ways to go here, 40 whatever days to the Derby, as they say, or maybe it is the Derby as well. The vaccine story, the science story, is all the rage among the science-trained elite. I don't sense it has any determinative traction with the undecided. Is it a campaign issue?
It is a campaign issue. Should there be a major development that would prevent a vaccination from going into the timetable that the experts as well as the lawmakers have suggested, which of course is between the end of October and next summer. So the goalpost on that particular timetable has not moved. But I think to your point precisely, Tom, in terms of there being a headline that says vaccine approved and then a major bump in the polls for one of the candidates, that's not likely going to happen.
Greg Valliere leading this morning with what you've been talking about, Kevin. He's on the Cirilli page, which is late October, the president gets an up 25, up 28, up 30%, one-off GDP statistic. Yep. And I take Valliere's point, this is a huge favor for the president, isn't it?
It's a massive, massive, huge favor for the president. And at around that time, there is a scheduled meeting for the health experts in terms of vaccination approval, coupled with the economic indicators that are going to be coming right around the time of the last scheduled debate. So you factor those 2 points in with a third point, which is that there now appears to be a narrow but still chance of fiscal stimulus coming before the election, because Speaker Pelosi publicly saying yesterday that she wants to keep lawmakers there through the end of the month, maybe into October, to get to some type of fiscal stimulus deal. It would appear that there does appear to be some new wiggle room for the Republicans on the economy, which is still their strongest issue according to the polls.
Does anyone remember the book that came out? Do you remember that, Kevin? What was that, a week ago? Feels like 6 months ago. Does any of this stick? Does anything change off the back of these things?
You know, and I think that's a great point because, you know, when you look at the books and whatnot and all of these developments, you know, you're right in the sense that it doesn't appear that the water cooler talk of the day is sticking. I go back to 2016 when there was such this obsession over paid speeches, over, you know, over Comey at that time. But really it was healthcare that was something that the Republicans continued to hammer home on. I'm curious to see if they can sharpen their tone on the economy and if that's going to be a subtext, because the Biden campaign has been sharpening their defense of their economic vision, especially when it relates to infrastructure and more massive stimulus. So if you're taking a broader step back, regardless of the outcome, should there be a Democratic victory in November, in the first quarter of next year, there will likely be another massive round of stimulus should Biden win.
I will just say, you say that the water cooler talk isn't changing. Perhaps it's because no one's at the water cooler anymore. But I will say, you keep talking about the stimulus, and let's talk about the likelihood of this fiscal support bill getting through now that President Trump seems to be throwing his support behind something more in the sphere of $1.5 trillion. Really, what chance does he have to get Republicans on board with that?
Well, two things. When you look at the jobless claims that came out yesterday, still 860,000, and you look at the economists that are saying that maybe the pace of this recovery, as they had been predicting, is starting to slow down. They need that momentum, upwards momentum, heading into the third quarter of this calendar year, right around the timing of the election. But the second point that I would make here is that from a policy standpoint, the Problem Solvers Caucus might not get everything they want in the final version of fiscal stimulus, but that sunrise sunset clause that is in the March proposal, where based upon the data, the fiscal levels would increase or decrease based upon the virus data, is something that could ultimately make its way into the final version of this bill. There's a lot of pressure in terms of how middle class, lower middle class folks are starting to feel this. I mean, you look at the front page of the Journal today, more than 1 million people still had not qualified for mortgage forbearance. More than 1 million Americans still not able to refinance on mortgages. That's impacting 1 million families in this country as a result of the lack of communication coming from both parties in Washington.
Kevin, let's get out front of Speaker Pelosi appearing with Bloomberg at a 12 noon hour today. Kevin, it's real simple. What's the why here? What in God's name is Nancy Pelosi doing?
You know, well, based upon my reporting, what I can tell you is that her signal yesterday that she needs to keep lawmakers here to get to some type of deal is being interpreted by rank and file members as she's starting to come around to the notion that fiscal stimulus might not be as a political hot potato as once had thought, but is really important for millions of Americans who need to keep their homes and also need to keep their jobs.
Kevin, good to hear from you. Kevin Cirilli, Bloomberg Chief Washington Correspondent down in D.C. Tom Keene, the pressure to do more, certainly not going away anytime soon. And I can tell you the story here on this side of the Atlantic is not Brexit, it's not negative interest rates, it is about this pandemic and testing and the local lockdowns that are taking place in the northeast of the country. We heard from the House Secretary here in the UK a little bit earlier this morning, Tom, and he just couldn't rule out another lockdown, couldn't rule it out. And I think there is a little bit more worry in this country over the last week, some worries that just weren't there a week or so ago.
So what's the distinction of the weekend? It's like here, John, it's small businesses getting crushed, right?
Small businesses getting crushed and areas of the United Kingdom going into some form of a lockdown, Tom, and I think that's critical to realise. That is happening. Not a nationwide lockdown, not a shelter in place like we saw several months ago, but certainly restrictions being put on certain cities across this country. We have heard from the Health Secretary, the cases are going up, the hospitalizations are increasing as well. It's of concern, Tom, I have to say, going into the winter.
Well, it'll be, you know, again, it'll just, I'm trying to get to October. I mean, you're trying to go into the winter. And, you know, Lisa knows this. We had the schools in New York City, the public schools in New York City. Lisa, am I right to say not opening a second time?
Yeah, not opening until October 1st, but some people are questioning whether they'll reopen at all. And, John, what your experience over in England, a lot of people are wondering whether the U.S. is going to be facing some of the same dilemmas as things try to restart.
A cloudy outlook for 2020 going into year-end, that's for sure.
John, Rebecca Minkoff just emailed in and says, Tom, do something.
What did she say?
She said, do something.
What? Do what?
Purse. Better purse.
I don't know.
Better purse.
It's Lisa's birthday. Minkoff is like all over me.
Oh.
That's one hell of a transition there, Tom.
Thank you.
Thank you for that. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This show is off the rails this morning. I'll try and get it back on the rails from New York and London. Good morning. Here's the price action this Friday morning. We're shaping up as follows. Equities going absolutely nowhere. We advance about 5 points on the S&P 500. In the FX market, the euro stable, euro dollar 118.42, range bound 10-year of the last several months, 0.67% is your yield. We come in around about 2 basis points. And the route in yesterday's session for the NASDAQ does not follow through into Friday, Tom. That's the story for the equity market.
That'll be interesting in the equity market, but far more fascinating to me, John, is a bond market. We've got the right guy for a Friday briefing into your weekend reading to try to get reset, recalibrated, next week. James Karen is at Morgan Stanley. He does strategy, but far more importantly, actually has real money at work as well, head of global macro strategies for the shop. Jim Karen, thrilled to have you here today. What are you writing for Monday? What's a single idea for Monday we need to know?
Well, I think after the FOMC meeting, the market reaction has been somewhat disappointing, but I also think it's somewhat also misunderstood. And I think this has been a watershed moment for the Fed. I know we talked about this with Jackson Hole and what have you, but the Fed is effectively changing their policy reaction function to essentially inviting much, much more inflation. And I kind of talk about this concept of the Phillips curve, which is this inverse relationship between the unemployment rate and inflation. The lower the unemployment rate goes, in theory, wages and inflation are supposed to go higher. And the problem with that is that this has been tattooed on the brain of every member at the Fed, and now they're starting to walk away from this governing principle. And that's the whole concept of this flexible average inflation targeting. And what we saw last week, which I think was extremely significant, was in the summary of economic projections, what the Fed called for was a policy rate unchanged, through 2023 at 0.1%, yet the unemployment rate to fall to near full employment levels of 4%. So typically in the past, we would have seen the Fed talking about being preemptive and hiking preemptively to head off inflation. There's no talk of that whatsoever. In fact, the Fed's saying we're not going to hike until we overshoot, which might not be until 2024 or 2025. And that has implications for the 10-year yield.
Okay, Jim, we're distracted today. Gareth and Sergio folks are in final descent into London. Jim Karen, what I want to know right now is what's the balance between the nominal yield, the inflation break-even, and the residual, the real yield? Which of those should we focus on as a determinant of how this market will break?
Absolutely, unequivocally, the real yield. And because that is essentially what the Fed is pushing on right now. Because the nominal yield, as you guys have been highlighting on your show, is going nowhere. It has gone nowhere. It's between 60 and 70 basis points, pretty stable. And that's by design. You have QE, and that's helping keep those yields lower. But the Fed is also inviting higher inflation expectations into the future. So what that's doing is that's pushing down the real yield. That the 10-year real yield is at minus 1%. So what that does is it weakens the dollar, and it is also the de facto policy rate to ease financial conditions, because you can choose to invest in 10-year treasuries with a negative real yield of 1%, or you can go buy high yield bonds or investment grade or equity, or you can buy other assets. And I think that's the way the Fed is trying to support the markets at the zero lower bound without cutting to negative, because we don't think they want to do that.
Jim, I know it's a bit cliche, but you know the phrase, if there's a bubble forming, buy it. Do you think one is, and are you buying it?
I'm not going to say that there's a bubble forming. I'm going to say that there is potential for one to form. So, because the way that we have to think about this is that there's a lot of liquidity being injected into the market for a worst case scenario in the future. So if there's another lockdown, a second wave, if there's a big, economic decline, then we think that we have ample liquidity, hopefully, to get through that too. But what if that doesn't happen? What if we get a vaccine? What if we have better economic conditions? Then all that money is going to stay in the system. The Fed's not hiking. They're not going to drain it. So then you start to get M&A activity, you start to get private equity activity, you start to get all kinds of different things, share buybacks. At that point, I would say, okay, maybe there's a bubble forming. But at this point right now, we're still standing in front of what could be a steamroller, so we just don't know.
And John, I know you're going to name your show Yield Going Nowhere, but that didn't work out. I don't give a damn, folks, about the real yield. I just did it to promote John Farrow this weekend from London with The Real Yield, See It Worldwide.
I appreciate that, Tom. Jim Karen was a guest on it last week, so we have a little brief ahead of this conversation.
You're front-running us again, John. Why would I expect anything else?
Why wouldn't I? Jim Karen, let's continue this conversation. If they're going to start behaving that way at some point down the road, do I want to own the equity of these companies or the debt?
I guess it depends where on the capital structure you own the debt. So I would say that you want to own the less or the least duration sensitive debt. So I would go into the high yield. I'd even start to go down in quality if you're optimistic. If you're optimistic about the future, or even in asset-backed securities, you can start to look at some of the higher yielding sectors there. The equity should. I mean, again, I'm a bond guy, not an equity guy, but from a financial conditions perspective, what it tells me is that at a very, very low interest rate for an extended period of time and 10-year treasury yields around these levels, that the equity risk premia should continue to come down. And what that would mean is that would be supportive generally of risky markets. So I would say that you probably, if you have a slightly more optimistic outlook on this, you want to be in less interest rate sensitive sectors. But what I always say is have a very diversified portfolio, because if times of stress do come, it's going to be the high quality liquid assets that are more duration sensitive that tend to be a lot more liquid. So if you need to raise cash, you can do that there. So really what we do at Morgan Stanley Investment Management for our clients, when we're investing, is we really try to keep that mix. I'd say that we lean to the optimistic. However, we want to make sure that we have ample opportunity to raise cash if we need to, or become defensive very quickly if we have to.
Just to sort of put a bow on this conversation, you started by saying that this was a watershed moment for the Federal Reserve, where they changed their guidance on inflation. Markets are not buying it, yet investment strategists are saying they should, and that yields will eventually rise because inflation will eventually tick up. What will drive this new regime, aside from the Fed, which has yet to prove that they can really have any effect whatsoever on inflation?
Lisa, I think that's a great question, and this is something that we're hearing quite a bit. The big disconnect in the market, I believe, is that what the equity market heard was that the Fed was not extending their purchases, or they didn't do anything more in QE, and that they're not doing anything actively more to promote lower yields. This whole thing about the Phillips curve and the unemployment rate, I think that gets lost largely on the equity markets. I think that this is much more of a bond technical. There's a lot of bond guys been looking at this for the past several decades. But I think what the markets were looking for at the FOMC meeting was a statement where Powell was going to come out and say, we're going to increase our purchases, the pace of purchases, we're going to do more QE, we're going to do something active to keep these yields lower. Instead, what he said is we're going to invite inflation into the future, and yields actually started to rise after the FOMC meeting, and that's when equities started to turn down, and of course that can probably beget some more selling and some adjustment. So I think this is more temporary. I think that the longer term, technicals for this is much more supportive and favorable. So as far as risky assets go, whether it's high yield, asset-backed securities, in some of the higher yielding sectors, I'd be a buyer of the dip.
Hey, Jim, great to catch up, as always. Jim Caron there of Morgan Stanley. Just want to turn to the equity market very quickly. Some headlines coming out here worldwide for you. The Commerce Department prohibits WeChat and TikTok transactions. That just crossed in the Bloomberg just now. The Commerce Secretary, Wilbur Ross, is currently on Fox Business, and he only said a couple of minutes ago that talks between TikTok and CFIUS are ongoing, that they will be putting out these new rules on TikTok and WeChat. And here's the headline crossing the Bloomberg, Tom, that the Commerce Department prohibits WeChat and TikTok transactions. And there is some price action to speak of right now, with Oracle down by about 2% in the pre-market. And I believe if you can find Facebook in early trading too, Tom, Facebook picking up a bid here.
Yeah, John, I find it extraordinary. And let me go, folks, I mean, I know I'm a criminal, but there's WeChat on my iPhone, and it's how my family talks to each other. It's that simple.
You're not alone. WeChat has an average 19 million daily active users in the United States. This is definitely going to affect a lot of people, and there has to be more clarity, though, John. This seems like we've been getting such bits and pieces, and it's a head-scratcher to go back to what Dan Ives said earlier on this show. And, John, this just sort of edifies that.
Well, you mentioned the most important word, Lisa, and that's clarity. And right now we don't have much clarity at all, Tom. So the only headline I'm going on at the moment, and hopefully I can receive the statement from a member of our team in just a minute, but the headline I have right now is that the Commerce Department prohibits WeChat and TikTok transactions. Wilbur Ross saying the TikTok shutdown would come in after November 12th if no deal. So that's the line in the sand now. It's November 12th,
Yes,
if
well
no
said.
deal. Commerce saying some WeChat TikTok transactions prohibited September 20th. So it's hard to understand here, Tom, what the real hard deadline actually is to achieve a deal between Oracle and TikTok. It keeps coming through that these transactions will be prohibited here, there, and everywhere.
I mean, how am I going to get messages that say, Dad, can you send money? I mean, you know.
Are they the messages you receive?
I'm looking at one right now, you know.
Well, you know what? Just hear from Michael McKee. He's saying what the Commerce Department seems to be saying is download the app now before September 20th when things start to get a little more hairy.
Come on. That's, okay, whatever. You know, I agree with John. We got to monitor this and get clarity. I mean, it's a big announcement.
It could be a big announcement. Let's give it a couple of minutes and get a member of the team to go through the whole statement.
Fair.
Hopefully Michael McKee can join us. We'd love to catch up with Kevin Cerilli down in Washington, D.C. as well. We need to get this right. Coming up in the next hour, looking forward to this conversation, Brad Setzer, Senior Fellow for International Economics at CFR. From New York and London, as we go through these details for you to check out the equity market, futures positive 4, up a little more than 1/10% on the S&P 500, alongside Tom Keene and the birthday girl, Lisa Abramowitz. I'm Jonathan Ferro. On Bloomberg Surveillance, heard on Bloomberg Radio, seen on Bloomberg TV. That's about as nice as I'll get this Friday. This is Bloomberg.
I won't get that nice.
With the First Word News, I'm Rishika Gupta. Congressional Democrats are weighing their next steps after President Trump backed a bigger stimulus plan. Some are keeping pressure on House Speaker Nancy Pelosi to bring a new coronavirus relief bill up for a vote. Pelosi says some lawmakers don't want to advance any legislation until they have an agreement with the Trump administration. President Trump announced $13 billion in new farm aid at a rally in Wisconsin. The move had been widely anticipated. Wisconsin is a farm state that's critical to the president's chances. He's trailing in the polls there. And Joe Biden is drawing a sharp contrast between his middle-class upbringing and President Trump's wealth. The Democratic presidential candidate was making a plea to voters in the crucial state of Pennsylvania, where he was born. Biden returned to his hometown of Scranton for a CNN town hall meeting. He said he views the campaign as a campaign between Scranton and Park Avenue. And the Federal Reserve may extend the unprecedented constraints on bank dividend payments and share buybacks. The Fed says it will decide whether to prolong the limits in the next 2 weeks. It's now conducting stress tests. Regulators imposed the cap in June. At the time, the Fed said that there was potential risks to banks if capital distributions continued at the same pace. In the UK, Health Secretary Matt Hancock is refusing to rule a second national lockdown. Hancock told the BBC that the speed up of coronavirus cases and hospital admissions represents a, quote, big moment for the country. According to the Financial Times, Prime Minister Boris Johnson's science advisors have proposed a 2-week lockdown in October. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Millions of students around the world are now learning remotely amidst the COVID-19 pandemic. Is it a catastrophe or an opportunity? Could this moment change education as we know it? Join us for a Bloomberg Technology Special 2020 Year in Crisis, the virtual classroom on Bloomberg Television.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From New York and London, this is Bloomberg Surveillance. Good morning to you all. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. This just crossed on the Bloomberg in the last 5 minutes or so. The Department of Commerce announcing prohibitions on transactions relating to mobile applications WeChat and TikTok to safeguard the national security of the United States. So these are the dates you've got to keep in mind, Tom Keene. Some WeChat TikTok transactions prohibited September 20th. Some TikTok transactions prohibited as of November 12th. And that means only one thing. We need a bit of clarity from the team at Bloomberg News, Tom Keene.
And the story is very broad. What is the team? Is the team technology? Is the team national security? As Mr. Ross is focused on at commerce? William Ferries can really tie all this together. Earth sciences, huge degree out of Stanford. And he's taken that over to the national security beat here at Bloomberg. Bill Ferries, I get the idea that the date's out there and they're in heated negotiations into the weekend as well. Let's take a representative U.S. family. How about the Rubio family down in Florida with 4 kids? And the only way they're communicating, because half their kids won't speak to them, is WeChat. Are you telling me Marco Rubio's not going to be able to talk to his family because Donald Trump is going to take WeChat away?
Tom, the first thing I thought when I saw the news cross the wire this morning was, I need to get home and check my son's TikTok account and see if it still works, because we're going to have a problem if it doesn't. Listen, I think, this is, the news this morning is a hardline tactic by the administration to really put the pressure on China to agree to some sort of a deal here ahead of this Sunday's deadline. The reporting we had late last night was that many of the people in the administration who had been opposed to the deal on national security grounds were starting to fold a little bit and believe, as they got briefed, that this Oracle agreement probably would work. It probably would cut that Gordian knot and find a way to protect national security, even if Oracle, for instance, isn't the majority owner, but has a pretty significant controlling stake in what happens from here on out.
Bill, from what we understand this morning then, just to break down these 2 dates, it seems that as of Monday, what the United States would be doing is banning TikTok in the US from updating. And as of November 12th, if we can't clear up some of these issues, that's when we start talking about a full shutdown of the app in the United States. Bill, when we're having this conversation, continually over the last couple of weeks, it's focused almost exclusively on the U.S. side, the administration, on whether they would or wouldn't accept a deal in its current form that Oracle is proposing. What's China saying? What are you hearing?
Well, China has its own interest in protecting its own company and its own intellectual property in this case, and they've been trying to find a deal that gets to some of the U.S. concerns, but lets them, continue to be able to monetize this program, this software, these apps that have been so hugely successful. Usually the relationship has gone the other way. It's been the U.S. developed apps that take over the rest of the world. This is one of those few cases that the U.S. hasn't seen a lot of in the past, where it's something endogenous to China that has become wildly popular. And if you have kids, you know how much time they spend on these things.
No.
Never.
Bill, I guess what we're finding out, though, in the last week is that ByteDance and China didn't want to sell this thing. And what we found out in the last week, or at least the United States has found out, that the only kind of deal that they can get done is the one being proposed. Bill, can the two sides come together then based on that?
Well, and, the one thing we haven't talked about is the election and whether, the U.S. government wants to be in the position of cutting 100 million users in the United States off of a service that is getting a pretty heavy workout these days. So I think you're right. I think this is the agreement that both sides are inching towards, that China's not going to sell this outright. This is not going to become TikTok U.S. With no say by ByteDance or the Chinese, the Chinese authorities that have been helping negotiate this. So there's going to have to be a middle ground, and it's probably not going to end up with majority U.S. ownership.
Bill, John rightly said this is something that we need clarity on. Clarity has been lacking around this whole process. Bill, do we get any clarity with respect to this statement in terms of who has the upper hand in Trump's cabinet, the China hawks or the moderates? The Steve Mnuchin's on one side and the Mark Meadows on the other side.
Oh, I think ultimately this has been driven by the hawks. And you think, and you see the people who we sometimes put in that category, someone like Secretary of State Mike Pompeo, who is, as of last night, starting to dial back some of his opposition. You see the gradations in hawkishness in the administration. But I think, from the beginning, this raised concerns about whether the administration was just sort of picking and choosing things that were popular from China that it wanted to take a political stand on, or whether this was really going to be a policy of, we want clean networks, we want to make sure American user data doesn't end up in China.
Bill, can I go back to first principles? Is there any evidence that WeChat is taking our data or using it in a devious national security way?
No. And I think when you talk to the people who really dig into the code, they will say that Google sucks up a lot more of your data and does put it to certain uses. I think the U.S. concern is there's enough potential that China does this that it's a problem. But I think, when you look at the algorithms, you look at the way the software works, Google, Facebook, they're vacuuming much more from you.
Bill, great to catch up. Appreciate you jumping on the phone for us. Clarity we needed. Bloomberg's Bill Ferry's there on this situation that's been evolving now for several months. And I've got to say, Tom, there's a real question about credibility here. You're either willing to shut something down or you're not. And if you're telling someone they've got to sell something, then they should have to sell something. And that story has changed. It's shifted in the last couple of weeks. It's why we didn't see it get sold to Microsoft and why all of a sudden this partnership evolved with Oracle. That's the story for me. And that's the tension between China and the United States. I think to be credible with China, you've got to follow through. And we just haven't seen the follow-through on this particular story anyway in the last couple of weeks.
Yeah, and maybe the surveillance bluster meter is off the chart right now. My only question, John, is how does China go if they take a hard line on this? And the first thing I thought of is, what does China do in reaction with something tangible like Apple Computer? I mean, again, as Bill Ferry said, where's the evidence of a national security violation?
I wouldn't know, Tom. The Commerce Department says there is some worries. The Secretary of State says there are some worries. The President says
give us a glimmer.
There are some worries.
Give us a glimmer.
Tom, you can see why there would be. I mean, let's just think about that. You can see why there would be if there are huge amounts of people in the United States of America using an app and the Chinese Communist Party can get hold of that data. You can see why there could be. You could certainly see why there's concern.
Could be, absolutely.
It's bipartisan. People think that there could be a potential threat there. The question is, what is this deal, this unclear deal, doing to actually stave off those concerns?
Can I look at global Wall Street guys into the weekend? The structured bond world, John's been turned upside down by derivative mistakes, mostly centered out of Paris. Did you see the headline on HSBC?
What was the headline?
They're going to shut it down. They're going to shut down structured products in Paris.
From New York and London this morning, good morning. This is Bloomberg Surveillance. Stand on top of the news flow. This is Bloomberg.
are personally affected by the fire, direct family as well as extended members. We've had people who've had to evacuate themselves. And so it's kind of balancing out the management of our critical patients with just making sure that we can stay stable ourselves. This is just a lot for everyone.
Trying to reunite owners with their animals at this location. We're not sure exactly how long we will be here, and so we're attempting to make efforts to create some infrastructure and to make a more permanent temporary shelter that can serve the residents of Jackson County for the next couple of weeks of meeting.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Data quality has been deteriorating for several years, but it's been really, really bad during this crisis.
This V-shaped reaction or V-shaped recovery is not going to happen.
Inflation could come back faster and harder than anyone's expecting.
As much as I appreciate everything the Fed is doing, I'm not sure that they have the tools to really let inflation rise.
Austerity doesn't work. You can't shrink your way to growth.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance on Bloomberg Radio, on Bloomberg Television, on WhatsApp and TikTok worldwide. Lisa Abramowitz, John Farrow, and Tom Keene. An extraordinary Friday, getting ready for October as well. And then Mr. Ross, I believe over on Fox Biz with Maria John Farrow, drops a bombshell. He's going to take TikTok away from my children. I just don't believe it, including updates.
Well, shall I be clear, Tom, about what's actually going to happen and try and put it in plain English?
Please.
As of Monday, you won't be able to download the app. If you already have the app, you won't get the updates as of Monday. As of November 12th, if we don't have a deal, that's when the shutdown comes into full force. And that seems to be where we lacked the clarity in the last 20 minutes, Tom. But in plain English, that seems to be the story for the likes of TikTok over the next month or so.
You've got to believe in the soup of the news that the Chinese will have to respond to this, whether it is the China vehicle of TikTok or whether it's the government in Beijing as well. Lisa, I mean, it's just a soup of news, including the FT lead this morning that they may consider an IPO with Kevin Systrom of Instagram leading the American company.
The hard thing is parsing out the noise from the signal. What really is going to go through? And I think, to Bill Ferry's point, this could be a hardline negotiating tactic. It seems to be taken that way in markets with not that big of a reaction. Oracle shares down about 1.5% in pre-market trading. Hard to see what this is actually going to accomplish. This is is a deal, a transaction. We don't even know how to identify it with very little visibility, Tom.
But John, the key phrase there from Lisa's hardline is we're on Bloomberg Radio and Bloomberg Television and communication in the Americas clear. I mean, how does China react to hardline?
What's the deadline? What's the hard line? If you keep moving the deadline, there's no hard line, is there? Yeah. And if you keep allowing the form of a deal to change, then there's no real deadline either. I think that this has just moved here, there, and everywhere. The president of this administration have tried to test the Chinese with a harder line, tried to test the Chinese Communist Party. I think many people have made the argument that they've welcomed that to break the status quo of the last 20 years that hasn't got the change from China in a way that many people wanted. But this case study alone, Tom, just shows you how difficult it is to do. Because initially what this was about was forcing a sale, telling ByteDance that you can't operate in the United States unless you sell this. You need to sell this. This is the date you need to sell it by. And now it's become some kind of partnership with Oracle. It's just become something else. They've just moved the goalposts several times in the last couple of weeks alone.
Well, the goalposts will be the talk Sunday, the Philadelphia Eagles playing football, and everybody will be on WeChat looking at that, including Bloomberg chief WeChat correspondent Kevin Cirilli. Just on with us moments ago, we pulled him out of Ben's Chili Bowl to make a repeat appearance. Kevin Cirilli, what is the political risk to the Trump administration if this is bluster and not policy?
I actually don't. I think there's minimal political risk just because I don't think this is one of the issues that is driving the political conversation in 2020. It feels very divorced from the 2020 conversation because there's such bipartisan understanding and commitment on behalf of senior policymakers to rein in China. And I think Jonathan really just characterized it incredibly well as a case study in terms of the opportunity that the United States has in terms of really telling Beijing that certain companies are not going to be able to come into the U.S. Marketplace and do whatever they want.
Kevin Cirilli, are you suggesting that Joe Biden will agree with the president we should shut down TikTok and WeChat?
Yes. In terms of taking, he's not going to phrase it like that, but I just spoke with Senator Chris Coons, a Democrat from Delaware, who told me he's open to being Secretary of State in the Biden administration just moments ago. And he said that he's got bipartisan legislation with people like Senator Marco Rubio, a Republican from Florida, that would seek to do just that, rein in China in terms of their a more aggressive approach, especially as it relates to intellectual property. But the bottom line here is that this is TikTok ping pong operating in negotiations publicly, behind the scenes, on the front pages of all the financial press. This is an open negotiation coming from the Trump administration that says, you know what, we're not satisfied with what he's hearing from CFIUS. And as a result of that, we are fully prepared to shut down the app if we don't get a deal that we want.
Kevin, it's only credible if they follow through. And to broaden this out, I think one of the biggest challenges for any administration in the United States, whoever leads it for the next 4 years, is not necessarily the Chinese Communist Party. It's at home in the United States, in the C-suite and a consumer base as well. Because in the C-suite, what we've seen with the Walt Disney Company is they're very happy to go over to Xinjiang, China, and film for Mulan. What we've seen with the consumer base is they're very, very happy to download TikTok and allow their data to go back to China. And Kevin, I know it's a bipartisan issue. I also understand from the electorate's point of view, they appreciate a hard line on the Chinese Communist Party. But where I haven't seen that translate is into a more proactive consumer base that is willing to turn its back on products, tech coming out of China, and a more proactive C-suite that is prepared to do the same thing. And Kevin, I think that's the challenge to the administration. One, how can they get their allies in other countries to come along with them? Europe's sat on the fence for the last several years. And two, how can they get the rest of the United States to come along with them, from the people, the consumer, all the way up to the top, to the C-suite?
And I would add the National Basketball Association to that list as well. And Jonathan, I think right there is the hurdle that Democrats and Republicans face in terms of the mass education that would require for there to be a significant consumer sentiment shift as it relates to several of these industries, whether it's athletics, entertainment, or intellectual property. But just one more quick point that I would make there in terms of, based upon my reporting, which is this is just the first step. and there is threefold the amount of legislation that has been introduced in this Congress alone as it relates to China, as it relates to reining them in. And we should note that from an economic standpoint, just earlier this week, the Treasury Department issuing sanctions against a Chinese firm in Cambodia, which had been posing as a manufacturing company, but ultimately was trying to design a military base. So the One Belt, One Road expansionary policies of China, whether it's in Africa or elsewhere around the world, is now very much on the sanctions and restrictions lists that the government, the federal government, is developing.
Kevin Cirilli, see you in the next hour. It's every hour with Kevin Cirilli, our chief Washington correspondent. To go from Bill Ferries over national security to Kevin Cirilli, we're pleased to tell you David Kirkpatrick of the Facebook Effect and one of our great technologists will join us here in a number of minutes. We're going to squeeze in here Lee Farage of State Street, head of macro strategy. And of course, Lee Farage, I go to Daniel Yergin's The New Map, which is we're living in a new world. You and I never would expect that they would rip something like WeChat away with us on national security in awe. How does that change macro strategy?
Oh, I mean, I think from a macro strategy perspective, geopolitics has not been a focus of macro strategy for 20, 30 years until essentially the Brexit vote. That's when the game changed. We had the Brexit vote and then obviously the surprise election here. The rise of populism. Suddenly geopolitics matter, and now we've got this pushback against globalization that rightly, as you just discussed, this isn't just coming from the Republicans. The Democrats are on board with that as well. So, yeah, 20 years or so, we didn't need to worry about geopolitics. Now we worry about that and little else, quite honestly.
Well, Lee, this is coming at a time of tech dominance where the tech stocks have been the absolute leaders, and they also are at the forefront of the increasing tensions between the U.S. and China. I'm looking at Apple shares pre-market. They've almost given up all their pre-market gains on the heels of some of these headlines. Does the potential escalation of U.S.-China tensions threaten the thesis of the big global tech stocks that have done the best?
It does, to an extent. I don't believe anyone thinks that we will see a major trade war ahead of the election. Now, post-election, it could get worse, but for the next 6 or 7 weeks, it's probably likely to be, again, more rhetoric than anything else. And I think the problem with the tech stocks, as you mentioned, listen, we've gone a long way. I mean, the valuations are, equity people might be able to justify them. I'm a macro strategist. I look at them and I struggle with it. The NASDAQ is up 82% since the lows in March. To its peak, it was 82%. It's 64% up now. NASDAQ close to all-time highs. All these shares at all-time highs. We're in the middle of a pandemic. We're in a recession. We have huge amounts of uncertainty. We have an election coming up. The focus post-election is going to be more on domestic and a deglobalization trend. And yet these stocks continue to go higher, fueled by zero interest rates by the Fed, excess liquidity, extremely negative real rates. And that's why these stocks go up. But then when you get to these sort of levels, the volatility is going to go up. And that's really what we've seen over the last couple of weeks, is when you get these news stories now, we're going to see volatility increase. And I think the next 6, 7 weeks ahead of the election, we're going to see much more sideways markets, much more volatile markets. The valuations have gone so far that uncertainty now has to play into it. I'm not saying we'll necessarily start selling off aggressively, because that liquidity is still there, and we've got the ultra-dovish message from the Fed. But don't expect the smooth path up that we've been used to for the last few months. This is going to get much more volatile.
We've seen that choppiness over the last few weeks. Lee, apologies to keep this one short. Great to catch up with you as always. Lee Farage there of State Street. In this market right now, equity futures doing absolutely nothing, Tom. But I think many people will be with Lee going into that election. Things are going to get choppy, and they have been over the last 3 weeks.
And the key determinant, just to go away from the story before we get to David Kirkpatrick, John, what Jim Caron said is absolutely critical. How will this be expressed in the real yield? And at a negative 1.01 now, any breakdown there to new territory would be, to me, a key determinant.
I'll tell you, at 1 Eastern on Bloomberg TV, from New York City and London, good morning to all alongside
front-running our guests again.
And Tom Keene. I'm Jonathan Ferro with your equity markets settling down and settling in unchanged on the S&P. Go on, Tom, get it out. Just say it. What's wrong?
How come
what are you upset about?
I want a show. I want the nominal yield.
I'll get you a show. We'll sort something out. 10 Eastern this evening. Tom Keene, when everyone else has gone home, on Bloomberg.
With the First Word News, I'm Rishika Gupta. President Trump is ridiculing FBI Chief Christopher Wray. Wray told Congress that Russia is trying to hurt Joe Biden's presidential chances through social media and influence operations. The president tweeted, quote, "Chris, you don't see any activity from China, even though it is a far greater threat than Russia. Makers of the leading coronavirus vaccine candidates are making their trial plans public. The moves by Moderna and Pfizer come after increasing fears that the effort to develop a vaccine is becoming politicized. The drug makers are disclosing information about late-stage trials and how they plan to gauge their shots' safety and effectiveness. And job cuts on the way at HSBC. Bloomberg's learned the British bank is exploring plans to cut most structured derivative jobs in Paris. Most of those positions will be transferred to Asia. HSBC has said it wants to cut more than a third of the 678 people at its French investment bank by early 2022. And the British government says a round of informal trade talks with the European Union were useful. Meanwhile, European Commission President Ursula von der Leyen tells the Financial Times she's convinced a Brexit deal is possible. All that's a contrast to Prime Minister Boris Johnson's actions in recent days. He wants to tear up sections of the deal he reached less than a year ago. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
We never thought COVID-19 is going to hit us, but now looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the GBA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have a second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
we explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From New York and London, this is Bloomberg Surveillance. Good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, getting you set up for the opening bell around about 1 hour and 12 minutes away. Here's the price action in the equity market. A little bit of a snooze. We drift on the S&P 500 after a negative day yesterday. And FX, euro down 0.1%, euro dollar 118.34. Treasury yields come in 2 basis points, still range bound over the last several months. 0.67% is your yield on the 10-year. The news in the last hour or so. TikTok facing a shutdown November 12th. I don't think it's lost on anyone that is after the election. And you will not be able to download that app, Tom Keene, this coming Monday, apparently. Of course, pending what happens with this potential deal. If you have already got the app, I understand that you will not get updates if it's already on your phone from Monday in the United States. I should specify that, Tom, in the United States. This one heating up, isn't it, over the last couple of weeks and changing direction seemingly every other day.
More than heating up, and I hate to do this, John, as we've been nice to Lisa today, as you were way, way out front on the building China-U.S. tensions here, not months and months ago, but quarters ago. John Farrell, maybe with the advantage of being from England, saying, you Americans are crazy. Joining us now, we're thrilled Bill Ferries could join us on the national security look. Kevin Cirilli was brilliant again here moments ago. But we're thrilled that David Kirkpatrick could join us on short notice with Technonomy, obviously, and of course his wonderful book, The Facebook Effect. And he has been looking particularly at WeChat for many years for its ability to monitor and move forward social messaging as well as its sheer app utilization. David Kirkpatrick, what is the impact to Americans if WeChat goes away?
The impact to Americans if WeChat goes away is not huge because Americans generally don't use WeChat. The people that use WeChat in the United States are people who are trying to communicate with people in China for the most part. I think probably the biggest single group of people in the U.S. who use WeChat are Chinese students who are here in the United States, as well as Chinese business people who are traveling in the United States and Americans with close ties to China. I mean, in China, WeChat is an indispensable, not daily, not hourly, moment-to-moment tool for life. It is kind of a combination of Facebook, Google, eBay, Amazon, all rolled into one. Oh, PayPal, it all rolled into one. You can kind of do everything with WeChat. You can order your lunch. You can talk to your kid. You can, arrange to get a car. You can do anything.
David, you're the author of the book, The Facebook Effect, the inside story of a company that is connecting the world. We're talking now about WeChat that can feed my kids and also homeschool them. I am looking forward to some app that can do that, frankly. I am wondering what it means for the media world to have Chinese media companies that are taking over and connecting the world. What is the significance of that?
Well, in the larger sense, there's no question it's a geopolitical threat. This is one of the real challenges, something we've talked about on this program before, the necessity and the likelihood of regulation coming down on American tech companies that have a global presence. The reality is that in any vacuum that we're created, if we do start to suppress, even for good reasons, our own tech companies, Chinese companies will come in to fill the void because they are growing very rapidly, they're enormously capable, and they do have the full backing of the Chinese government, which gives them enormous resources, even beyond the more obvious financial ones that they have. So, this is combined with the fact that, for example, Huawei has already built the internet infrastructure for most of the planet. Mao had this, I was just reading yesterday, Mao had a philosophy of surrounding the cities by starting with the villages. And, Chinese technology, especially infrastructure technology, has done the same thing with the developing world moving toward the developed world. So now they've basically won in the physical infrastructure. And these apps, which are more the content apps, are easily to come in their wake. They're already flowing across all the infrastructure. But the point is that China is enormously competent technologically. And they have a very clear global strategy for soft power and hard power, but particularly soft power influence, which we lack because of our free market system. And I'm not saying that's been a mistake, but we are in a very precarious situation when it comes to Chinese influence in tech at a global level.
David, Mark Zuckerberg of Facebook made that argument a couple of months ago on Capitol Hill. Do you think that argument's starting to resonate in D.C.?
Yes, I think it is. I'm very suspicious whenever Zuckerberg makes any argument these days because I think he's so self-interested. But in that sense, I don't disagree with him on this rare occasion. It's particularly taken effect, interestingly, among conservative Republicans like Marco Rubio and Josh Hawley, Republican senators. But I think you can't help looking at anything right now through the inevitable lens of the presidential campaign. And even if you look at the Commerce Department announcement this morning that they're going to ban WeChat and TikTok, the first sentence of the thing is, in keeping with President Trump's great leadership and desire to do this and this and that. I mean, we never used to get government regulations issued that way, with fealty to the great leader kind of thing. That's been coming more and more, and it worries me.
David, in the bluster of all this and the emotion, is Business Insider just has out a nice question. Is this enforceable?
Yes, I think it's enforceable, probably. You can enforce it by, first of all, banning them in the app stores of Google and Apple. And yes, you can use a lot of tools to force internet activity not to happen in certain ways. And I think there will be ways around it. I mean, people, in the U.S., people probably could use VPNs to use Chinese apps, just like Americans can use VPNs to use American apps in China. So there's elements that would be unenforceable, but I don't think that would be my concern. I think my concern is more or less chaos. And I think also it's a very odd thing in a way, considering that the young people of America, the youngest people, but even some medium young people, are so devoted to TikTok, to take away one of their favorite toys and favorite ways of spending their time right before an election doesn't strike me as necessarily that strategically wise.
David Kirkpatrick, great to catch up with you, sir. Bloomberg contributor. Tom, I'm medium young. I'm medium young.
Oh, I'm not?
But I don't use TikTok. I don't know what you are. If they're young and I'm medium young, I'm not sure what that makes you, Tom. But on a serious point, let's think about this. November 12th is the potential ban. It's after the election. They're not looking to take the toys away until after the election. Now, get yourself to November 12th, Tom. Let's say he doesn't have another 4 years. Let's say President Donald Trump is staring down the next couple of months. With free reign to do some stuff here, without thinking too much about the electorate.
As David said, it's original, to say the least.
From New York and London, medium young. Love that.
Young.
This is Bloomberg.
the Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York and London, this is Bloomberg Surveillance. Good morning to you all. For our audience worldwide, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, and joining us for an important conversation with the president of the Atlanta Fed, I'm pleased to say, Bloomberg's Michael McKee's dropped by. Good morning to you, Mike.
Good morning to you, John, and good morning to Raphael Bostic, the president of the Atlanta Fed, and welcome to Bloomberg Radio and Television Worldwide. Thanks for being with us this morning. I want to start by asking about the new framework. We know what it is. Appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. But what does that mean to you? How do you define moderately above, and how long is some time?
Well, first of all, Mike, thank you for having me on Bloomberg this morning. It's really good to be here. I don't talk to you often enough. But in terms of your question, what I would say is, for me, one of the challenges that we've had historically is that when unemployment or when the employment level has gotten too low, there's been a concern among economists and policymakers that that would trigger inflation that wouldn't be able to be controlled. And so the action typically has been that we're going to try to stop that labor market from overheating, and then in turn, that can put a damper on inflation. What we saw over the last 10 years or so is that we could get employment to a very high level without seeing that inflation. And so we wanted to be very clear in the longer run goal statement that we're going to wait to see for evidence of that overheating before we start to take action. And I think that's the biggest, the message to come out of that statement.
Well, what is the evidence that you would look for? Is there a level of inflation above 2% that is kind of your ceiling?
So for me, I would say I'm comfortable being above 2%, and it's actually more the trajectory than the levels. So if we were at 2.2 or 2.3 and it looked like we were going to be stable there for a while, that would be fine. You know, over the last 5 or 6 years, we've been at 1.6 and 1.7 and been at a stable level. So that would be kind of the flip side of that. By contrast, if we were at 2.2 and then the next quarter we're at 2.4 and then we're at 2.6, that trajectory is the thing that would give me some concern. So for me, I'm going to be, certainly the level is going to be something to pay attention to, but for me, the trajectory is much more important.
Well, give me your levels. From the forecast that you made, where do you think growth and inflation and unemployment are going to be in 3 years?
Well, in 3 years, hopefully, we will have the pandemic past us. We will have sort of figured out what all the structural changes that have gone on mean, and the economy will be back on a robust path. So our long-term estimate for our models is around 2% growth. Inflation can go at above 2% as well. I actually think just before the crisis, we were heading in that direction. I was pretty optimistic about how things were going. And in terms of unemployment, I think we can see levels approaching the 3.5 to 3 3/4 that we saw before. So I'm pretty bullish 3 or 4 years out, but we still have a lot of work to do right now to make sure that the amount of pain and damages that happens to this economy is minimized. So I think that staying on the local and the immediate term is something that we all should try to continue doing for a bit longer.
Well, I'm sure you know one of the criticisms on Wall Street after the meeting was that you can talk about getting over 2%, but you can't get to 2%. Why do you think that's going to happen?
Well, for me, I've been talking with my team a lot on this, and just before the crisis, and this is something that I tried to say in interviews, and I've talked to my colleagues about this. Many of the signals of inflation were at 2%, if not above 2%. So I think we were actually much, much closer to our target just pre-crisis than I think has been really recognized in the press. That said, we are not in that place now, but I have confidence that once we get back into sort of stable growth and robust recovery, that we can get back to that pre-crisis level where all the signs were positive. So I think that we in the last few years have done a lot to get inflation to a place where I could be comfortable with it and would suggest that the economy is really moving in a sustained way.
Well, is your policy now inflationary in and of itself?
So that's an interesting question. I guess what I would say right now is the pandemic is something that we've never seen before. This is a historic type of event. And if you look at the inflation numbers, there's a lot of noise in there. So month to month and quarter to quarter, the elements of a CPI, for example, are showing wide swings and much wider swings than you would ordinarily see. So it's hard to know exactly what signal we're seeing right now. At the same time, how labor markets have evolved has been so dramatic, and the stresses that have happened to particular businesses and how the pandemic has hit certain sectors much differently than others, it really makes it hard to tell exactly what's happening in terms of inflation. It's something that we're going to continue to work on. I'm hopeful that as we get further along in the recovery, a lot of these signals will become clearer. A lot of the noise that's happening and the extreme values will be reduced and be eliminated, so we can really understand sort of where the economy is standing.
I'm wondering what more, if anything, you can do. Your tool is interest rates. You've got interest rates at zero. You have tools to push down interest rates, but is there anything more the Fed can do to stimulate the economy, or is it really over to Congress now?
Well, I would say Congress has a very significant role. Fiscal policy is going to be important. Small businesses through things like the Paycheck Protection Program, those sorts of things create much more stable bridges than the type of lending that we can do. What I am doing here at our bank is a couple of things. So first, really trying to monitor the economy, make sure we're talking to small businesses, to families, and to banking institutions, so we understand where things are working well and where things are not working well, and we can deliver that information to policymakers in Washington. A second thing that we're doing is we are trying to engage with communities across this country, giving them advice on things around economic development, around sustaining small businesses in times of crisis that we've learned over years and decades of research and engagement in that space. So while we don't have a lot of energy in terms of interest rates, there are lots of other ways that we can try to sustain things, and we're doing all of those things. Another thing I would say is we're also engaging with banking institutions, encouraging them to deploy their capital, and also to find ways to provide relief for businesses and to families who are struggling with their cash flows as a result of the public health response to the crisis.
We're speaking with Dr. Raphael Bostic, the president of the Atlanta Federal Reserve Bank. If you were to talk to a member of Congress today, what would you say about the economy? Earlier this month, you saw definite signs of slowing. Do you still see that?
So we definitely see signs of slowing. You know, Mike, is interesting. For me, our team has been thinking about how do you characterize the economy today? And what we're actually seeing is something that's akin to a less than signal or symbol, where some parts of the economy, both in terms of geographies and sectors, are doing quite well and growing, and others are struggling or have struggled or are actually getting worse. And so one of the things that's been very interesting and a challenge for all of us is how do you take an aggregate number that is really an average of those two things and convert that into a discussion of the economy? What I would tell a policymaker is, look, there are lots of sectors where there's still a lot of pain and disruption that's going on. There are a lot of families who have a significant amount of uncertainty, and those things will wear on our psyche and our ability to grow. So I would encourage them to think about ways that they might provide support to help those who are in more precarious positions not have to struggle and worry. You know, we do an analysis of evictions, for example. We have an evictions monitor, and we've been working with Georgia Tech and some folks here in Atlanta. Eviction levels in Atlanta are higher now than they were a year ago, and the trend is going in the wrong direction. I've heard reports this is happening all over the place, which suggests that this precariousness is very present. And to the extent that that becomes a reality for a large number of people, the amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
I don't know if you use WeChat or TikTok. I kind of hope we don't see you on TikTok, but
no.
Given that it's the news of today, let me ask you this: the policy, the trade tariff policy towards China, has that had a direct impact on your district?
So the tariff policy has impacted companies in a complex set of ways. So you know, some businesses in my district have direct and important business activities in China itself, and they're reporting significant difficulties. A lot of our agriculture sector exports to China and has relationships with them in that regard. And so it's been harder for them. And that adjustment is something that we're trying to, well, I'm trying to see how they're adjusting and what types of things they're going to do. But it definitely has taken a toll. But that said, you know, the relationship with China is complex, and the trade issue has to be weighed against things like intellectual property and the protection of our comparative advantage. And so how this goes and how it plays out is important. Well, I would say I don't have a stake in this in terms of having authority to do things, but it is something that, as I see things happening, I try to make sure that policymakers in D.C. know, and I try to explain to our businesses and contacts across the district how this might look moving forward.
You've noted that the pandemic has had a disproportionate effect on low-income people and communities of color, and there's really no argument about that. But what can the Fed do about that?
Well, you know, I get calls about this all the time, and our bank has been an important source of information for communities across the 6th District. And some of the things that we're doing are working with local government officials, trying to give them advice on ways that they might help their businesses. We've been talking a lot, actually, just about how you maintain business activities in the time of COVID. So how do you think about customer flows in and out of stores to engage with that? We've also tried to engage with philanthropy to tell them about the natures of stresses and suggest that there may be ways for them to have real significant impacts in the communities that they serve. And so we're actually going much more micro in terms of trying to help those communities because there are so many different contexts. You know, I would also say this is not just a lower income and minority community issue. You go to a lot of the rural places, the more rural places of the district, they're struggling as well. They had challenges before, and as we've seen in many, many instances, this COVID crisis has exacerbated a lot of the disparities that we've seen. And so we're trying to work with rural areas as well to help them figure out solutions for this new world that we live in.
Joe Biden has suggested the Fed should act aggressively to combat racial inequality, even leaving open the possibility of adding a third mandate for the Fed. There's also talk that perhaps you should incorporate the black unemployment rate into your framework. What do you think of those ideas?
Well, they're interesting ideas. I think that we have to consider those sorts of things in a broader context. So for me, the black unemployment rate is one measure of how the economy is performing for an important segment of our population. But we have a Latino unemployment rate that is also higher than the national average and has been for a long time. You can think about labor force participation for women, for example. So this is a multidimensional issue, and I think that we got to think hard about how do we capture all those dimensions to figure out what's going on. I will tell you, though, I think that the policies coming out of the long-run framework are important because we are committing to letting the economy grow a little more robustly than we might have otherwise, and that has and should have positive implications for the ability of minorities and women and lower-income people to be fully attached to the economy.
One last question here. The Fed has suggested it is looking into its communication strategies. You struck all the language about the summary of economic projections from the new framework, and I'm wondering if we're going to see a different kind of communication arriving by the end of the year.
So I don't know about that. What I'm going to try to do is to make sure that I continue to communicate as clearly as possible with my constituencies. I think we've done a pretty good job. And Mike, let me just say one other thing on that last question, which is, another thing that we're trying to do is engage communities and constituencies. Today, we're actually having a conference on racial justice and finance, where we're going to try to bring in different voices and have them grapple much more deeply with issues about race. We're going to continue to have those sorts of conversations moving forward. And I think we're going to try as much as possible, and I'm going to work to make sure that the Federal Reserve is a place that people look to for thoughtful solutions to issues around racial equity and disparities that we've seen historically.
Raphael Bostic, thank you very much for joining us, the president of the Atlanta Federal Reserve, joining us on Bloomberg Radio and Television Worldwide. Thanks for coming on today. We'll send it back to you,
Mike
guys.
McKee. Thank you very much, sir. We appreciate it. We really do. I'm going to continue that conversation, pick up where Mike left off. I'm going to catch up with Mohammed Al-Erin a little bit later on Bloomberg TV. Tom Keene, he is in my time zone, in England, in quarantine, before he takes up his post as the president of Queen's College, Cambridge. Looking forward to this chat, about 20 minutes away on Bloomberg TV.
Hugely anticipated. This has been known for 18 months, I'll say at least, that Dr. Al-Erin will go back to Cambridge and, of course, with his affiliation with Oxford as well, and take over that really important academic position within the United Kingdom. We welcome all of you on Bloomberg Radio, Bloomberg Television, our simulcast on what was going to be a leisurely Friday. And the answer is it is not leisurely. There are the markets churning, red and green on the screen as well. But one thing I would say, Lisa Abramowitz, more than anything, is then the news takes over, and it is news of the many stories of China and the United States.
And this has been something percolating in the backdrop, but now there is the increasing uncertainty between U.S. and China over TikTok, over WeChat, and really on the relationship going forward between these two countries, with the hardliners digging heels in. And Brad Setzer has been following this from the flows, the money flows state of the picture, which I love, Tom, because we can talk a lot about the politics, but really we have to look at the numbers and the money. And what the money is saying is that the trade deficit between the U.S. with China is deepening. Brad Setzer from the Council on Foreign Relations, senior fellow for international affairs, and also longstanding background in international relations in the government as well. Brad, what do you make of this whole TikTok, WeChat news this morning?
Oh, I think, well, for one, the U.S. hasn't been very clear about the demands that it was placing on TikTok. I mean, there was the whole deal with Oracle for a while suggested that TikTok could retain, or ByteDance could retain majority control, which would be unusual. And then I think China is also flexing its muscles, trying to limit the export of various source code. And so I think for now, the U.S. seems to be signaling that it wants a full divestiture, or at least a shift in majority control. And China is resisting that, and the company is caught in between.
If you take a step back, you've been doing a lot of great work on the flows, the international flows between the U.S. and China. And if you take a look at what the legacy of the Trump administration is, has it created a more even playing field between these two countries?
No. I mean, I think it pretty clearly hasn't addressed the broad set of concerns that many U.S. firms had operating in China, nor from the Chinese point of view has it given them certainty around their relationship with the U.S. But it is striking that after the Phase 1 trade deal, U.S. imports from China and China's exports to the U.S. really have rebounded. And so even with all the friction, all of the uncertainty, right now China is exporting about as much to the U.S. as it ever has. It's a really quite striking outcome. One probably influenced by some of the changes in demand around the pandemic. But I think it also illustrates how difficult at the end of the day it is to really fully decouple.
Brett Setzer, this is one big game of chicken, and whether it's Vinod Agarwal at Berkeley or Avinash Dixit in the Art of Strategy at Princeton or what you studied at Oxford, chicken's a lot more sophisticated than we perceive. What is the risk to America of this game of chicken?
Well, I think there are, if you're thinking purely about ByteDance and TikTok, it is that some teenagers may not be amused on their phone as much as they normally would be for a period of time.
Travesty.
Travesty. From the broader strategic point of view, I think, a game of chicken and threats and blusters is probably not the most efficient way to move both economies to a state where they are slightly less integrated with each other. And the hard part has been defining what the slightly less integrated world looks like.
Do you perceive, Brad Setzer, as one of our great economic thinkers, that the United States is prepared for the response of China to what is perceived by many as bluster? How are we going to respond to whatever they say about WeChat or indeed about TikTok as well?
I think you have to be prepared to deal with the consequences of your action. And if China says, as a matter of policy, we would rather shut TikTok down than have a forced sale, ByteDance will be forced to do so. One of the classic insights of strategy is you shouldn't make a threat that you're not willing to carry out. And to the extent that the U.S. assumes that China will easily accommodate what China perceives as irrational demands on the part of the U.S. is making a mistake.
Does the election play into this? We've had a number of conversations this morning, Professor Setzer, that say, well, maybe it does, maybe it doesn't. Does the election play into this, or is this a bipartisan and separate discussion with China?
There's always a balance. I think at the end of the day, there is a bipartisan sense that the economic relationship with China still needs to evolve further, change in various ways. And that plays out through a set of actions. And whenever a decision is made that forces a deadline in the period before a presidential election, it's impossible to say that politics didn't play some role in the timing. But I think it's a reflection of a ongoing struggle on the part of the U.S. political system to translate a desire for a different economic relationship with China into reality.
And Brad, we've been talking all morning, and you just flicked at this bipartisan wish to even the playing field between the U.S. and China, this feeling that something's gotten out of whack. And you served in the U.S. Treasury Department studying the economic relationships internationally. What do you think people should be looking to do to actually create a better environment that would be agreed upon on all sides, at least within the parties in the U.S.?
Well, I do think that, that the basic question about how open the U.S. should be to China when China is not going to be fully open to the U.S. Is an important one. That's the implicit question being addressed in the ByteDance TikTok discussion, given that China's own internet is pretty closed to consumer applications from outside. And then I think there is the broader question of how much China will change. And if the answer is that China isn't going to change very much, then the question becomes how much further or how much do you want to roll back our current level of integration with an unchanged Chinese economy. The tariffs have played some role in that. But the tariffs have probably, the striking thing is that even with the tariffs, the trade imbalance with China has basically bounced back in the past couple of months. It's not fully back, but it has really returned. And so probably the policies that are in place to date aren't sufficient. I think the new factor, and I think this is a potentially important factor, is that the direction of pressure, at least in my judgment, on China's currency looks to be changing.
Right.
It looks like China's currency is under pressure to appreciate. And a stronger Chinese currency in the past has been much more effective than tariffs at creating broad incentives to move production and supply chains around the world and have them less focused on China.
Brad, thank you so much. Brad Setzer was with the Council on Foreign Relations. Of course, we've been featuring stronger renminbi today. Right now, a little bit weaker, but I don't know what to make of that. We'll look for renminbi opening Sunday evening in New York in the early morning of Beijing and Hong Kong. Lisa Bramwell, it's just a really extraordinary day here. On the data, Lisa, what do you see?
Oracle shares have bounced back from the lows after this news came out, which I think is really interesting. Now in pre-market trading, down about 0.4%. Again, looking at the price action, the market seems to be saying this humdrum, this sort of noise, seems to be more noise than signal. Yeah. And this, to me, is interesting because there is not a lot of visibility on this deal, and yet it does create this sort of tension about what is the template for U.S.-Chinese relationship to go forward.
Into the weekend, one of the tensions is the continuing story of the Levant and, of course, Eastern Mediterranean geopolitics. That's part of the story. On Turkish lira, we just ignored it today with this huge news flow. I do want to say for global Wall Street, a massive weakening of Turkish lira over the last 24 hours. It was one thing to go 740 to 7.50. And we have stormed through 7.50 out to new weakness moments ago. It's 7.57. I spoke with our Ben Harvey in Istanbul. He said this is a moving story. Into the central bank meeting next week, I believe Thursday in Ankara. We'll be following that off of our Istanbul News Bureau.
You know what's interesting, though? It's gone completely the opposite in the rest of the emerging world. Tom, it just shows Turkey is in a world of its own.
Oh, yes.
Emerging market currencies right now, they're hot.
Yeah, there's no question about it. Turkey's an idiosyncratic story, to say the least. Futures up 5, Dow futures negative 29. The bond market enough for Pharaoh to walk out the door. I'm not sure Pharaoh's on the open or even the real yield. The bond market's so dead. The Speaker of the House with David Weston at 12 noon. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
The cybersecurity sector obviously is no secret that it's probably going to do very well in the next 5 to 10 years, say.
2020 has already surpassed previous years' funding in digital health in particular.
I personally prefer to buy businesses that make money, and if you can buy them that are unlevered, that just means they're even cheaper.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bell this Friday morning. Equity futures elevated 9 points with positive a third of 1%. The big issue over the last 3 weeks, market jitters returning.
March could get more volatile.
A lot of volatility. Volatility in the markets will continue.
Whether it's the crisis, the election, the trade wars, the impending recession.
Failure to renew fiscal stimulus.
This is all about fiscal policy.
Uncertainty around elections.
That could be pretty disruptive.
Economic momentum is still pretty good.
This is a typical recession and recovery.
I'd stick with cyclicals.
Be selective when you're looking to bottom fish.
We're in a holding pattern for the next 3 or 4 months.
If you've got risk assets in your portfolio, very little choice but to move out the risk spectrum. Owning some safe haven assets actually makes sense.
And joining us now is Bloomberg's Kaylee Lyons. Kaylee, it is tech and a tech mess versus everything else.
Yeah, that's absolutely right, John. We have to remember that tech is responsible for so much of what drove this market higher off the lows in March, but that also led them to command very lofty valuations that investors are now starting to call into question, and that is allowing some of the cheaper, more cyclical areas of the market to start to play catch up. Over the past week, it is energy, industrials, materials that are leading, while tech and communication services, which houses Facebook and Alphabet, are among the laggards on a sector basis. And this is where I will pause, John, and say we've seen head fake after head fake when it comes to any kind of value rotation. Rarely has it stuck, but so far in September, it actually is holding. The S&P 500 equal weight index, whereas Under Armour is just as important as Apple, is outperforming its market-weighted peer by the most since in any month since all the way back in 2009. And we're seeing momentum build in the sectors that would benefit most from an economic recovery. Materials hit a new high this week, as did the Dow Transports, which hit an intraday record just a few days ago. And when it comes to the transports, what we're really talking about is the old economy, industrial companies more associated with traditional economic production. That old economy starting to finally gain some traction on the new economy, which of course is tech, less reliant on infrastructure and transport. If we can hop into the terminal at GTV Go, take a look at the 200-day moving averages on the Dow Transports, which is that blue line, and the NASDAQ 100 in white. They tend to trade relatively closely together in normal times. During the pandemic, of course, far from normal times, tech had been outperforming as it's seen as more insulated from the virus turmoil. But as the narrative shifts more toward recovery, that traditional economy is catching up. John, we'll just have to wait and see if this one actually holds.
Kelly Lyons, thank you. Thank you very much. Just looking at the equity market this morning, we do advance 10 points on the S&P 500, up around a third of 1%. Katie talking about the old economy. Just look at materials year to date. The NASDAQ gets so much attention, but materials year to date up north of 8%, off the lows, up about 70% through 2020. It is not just about big tech off the lows. There are other stories out there that we'll get our teeth into in just a moment. Pleased to say that Mohamed Al-Erin of Allianz and Bloomberg Opinion joins us now, weighing in on the recent trading, writing the following. Skeptical investors' appetite to challenge what they regard as elevated valuations remained repressed by their experience with and respect for ample repeated Fed liquidity injections. The Fed's repeated support for financial markets has engendered a deep buy-the-dip investor conditioning and a prominent FOMO mindset. Pleased to say that Mohamed is with us right now. Mohamed, great to catch up with you as always. A wonderful piece in Bloomberg Opinion in the last 24 hours. You're exploring whether we're losing an anchor. Are we losing an anchor, Mohamed?
Good morning, Jonathan. Thank you for having me. It is certainly less powerful, and let me explain. We know that for quite a while, fundamentals haven't been a determining factor, but liquidity has been. And there's been two engines. the private sector liquidity, new investors getting involved, and then the support of the Fed, which has been incredibly consistent. On the first one, we've seen it evolve from being a market-wise phenomenon to being very name-specific. So everything falls now on the second one. And what we've seen since Wednesday, since the press conference in particular, is that people are less comfortable about the effectiveness of Fed liquidity. And because of that, some people are more willing to challenge what Kayleigh rightly said are pretty elevated valuations.
Mohammed, on the Fed, though, in that news conference, I was trying to work out what everyone was upset with. In your piece, you talk about the specificity that they went through around rates and the vagueness around QE. Is the latter really that confusing ahead of an election just a couple of weeks away?
It is for markets looking for clear evidence. There's a piece out by Greg Ip that notes that it was all about verbal guidance. It was all about using the word powerful 10 times in the press conference to convince investors that liquidity injection remains ample and reliable. But when investors looked at details, they said, okay, so I understand you're very specific about your interest rate guidance all the way to the end of 2023, but what about your QE guidance? Because, John, what happens when interest rates are floored for a long time, the delta you get in terms of impact diminishes. But QE is a repeated influence. So that's why the marketplace was disappointed not to hear more about the QE plans.
Mohammed, when we talk about the marketplace, though, let's be specific. It seems to be just around the big tech growth story in the equity market. High yield still doing okay. Triple C, the riskiest part of high yield, has been rallying over the last week or so. Not much happening in the treasury market either. Mohammed, where do you see concern starting to emerge within this market cross-asset?
So think of the image of an umbrella, and the umbrella being the Fed. If you're under the umbrella, you're doing fine. And what's under the umbrella? Investment grade. Why? The Fed is directly buying investment grade. Parts of high yield. Why? Because the Fed is directly buying high yield. So if you're under the umbrella, you're fine. If you're outside the umbrella, things become a little bit more indirect. And that's why you see this distinction that you talked about, John, which is that the more you're outside the umbrella, the more questioning there is of will the liquidity effects continue to spill over to me?
We've got to get to the price action at the moment as well, Mohammed. About 24 minutes away from the opening bell in New York, with equity futures up 9, we advance a third of 1%. And some breaking news in the last hour coming out of the administration in the United States. On that, for a quick summary, here's Bloomberg's Scarlett Fu. Hey, Scarlett.
Hi, John. Yeah, spare a thought for American preteens and teenagers, because according to Secretary Wilbur Ross, the U.S. TikTok shutdown would come into effect on November 12th, after the election, November 12th, if there is no deal. Now, there is no deal just yet, but every day we get a little bit more in terms of developments on this saga. And here's where we are right now. Oracle and Walmart would potentially own a significant stake in the new TikTok. Would it be enough to be a majority stake? Perhaps if you include the existing U.S. investors in ByteDance, the Chinese-owned parent. And those firms would include Sequoia Capital and General Atlantic. The White House, of course, has made clear it's got national security concerns with TikTok as well as WeChat, and majority ownership by U.S. entities would address those security concerns. It's not clear, John, whether giving up majority ownership would be a deal breaker for ByteDance and therefore Beijing. We know Treasury Secretary Steve Mnuchin has said that CFIUS would examine the bid this week, would then make a recommendation to the president, who then make his decision. Bloomberg is also reporting that the new company that would be formed would also plan to hold an IPO in about a year. So, of course, we're keeping an eye out here on headlines, potentially, but for now, Secretary Wilbur Ross says the U.S. TikTok shutdown would come November 12th if no deal is struck. Back to you.
Scarlett, thank you. That deadline just keeps moving around a little bit more. Scarlett Fu there. We'll check in with Scarlett in just a moment to bring Mohammed back into the conversation. Mohammed, I know you're savvy on social media. I don't expect you to comment directly on TikTok, but just more broadly, this tension between the United States and China, how to navigate it going into the election in early November?
Just expect it to get worse. The evolution has been fascinating. You know, starting in 2017, tariffs were used mainly for economic reasons. Then tariffs were weaponized, and so were investment sanctions in a big way to cover national security. So we went from economics to economics plus national security. And now what we're seeing is involvement in specific cases and very detailed involvement. I think the message is very clear. Anybody who thinks that the China-US tensions are going away are simply wrong. These are with us, and they will amplify, and it's part of what I think is an era of gradual deglobalization.
Can you think about what that means yet, Mohammed? Because we've had several years to think about it directly for putting portfolios together.
Very little if you believe that liquidity is ample and reliable. And that's been the theme, and it's been the correct theme to bet on. So the big question is, do you still hold the view that liquidity can put on the sideline all other considerations? That is the key issue, and I would encourage investors to really get into the technicals. Look at flows. Look who's behind which flow. Because that's going to be critical. Where we go from here is going to continue to be liquidity driven, because if that engine disappears, then we have a long way between where asset prices are right now and where fundamentals would validate them.
Mohammed, it's been great to catch up. You're always generous with your time. And can we just say on this program, for which you've been a great friend over the years too, good luck with a new position at Queen's College, Cambridge, in quarantine right now, Mohammed, as well, I know. So good luck to you. It's fantastic to catch up. Coming up on this program, the US banning some transactions on WeChat and putting a freeze on TikTok downloads starting Sunday. That conversation coming up next with Dan Ives of Wedbush and BlackRock's Mike Pyle. In this market right now, 20 minutes away from the opening bell, equity futures up 11. We advance a third of 1%. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Making a decision. We spoke today to Walmart, Oracle. I guess Microsoft is still involved. We'll make a decision, but nothing much has changed. We'll make a decision soon.
The President of the United States ramping up tensions with China. The Commerce Department making an announcement a little bit earlier on this morning that the app will not be available to download from Monday. If you have it already on your phone, you won't get updates, and then it could shut down on November 12th. Have you got all that? For more, Bloomberg's Kevin Cerulli joins us now. Hey, Kevin.
It's TikTok ping-pong negotiations now happening publicly as Commerce Secretary Wilbur Ross announcing the new developments in the latest TikTok Oracle saga. Let's pull up the tweet that Secretary Ross alerted the public with earlier this morning when he wrote via tweet, quote, that at the president's direction, we have taken significant action to combat China's malicious collection of American citizens' personal data while promoting our national values, democratic rules-based norms, and aggressive enforcement of U.S. laws and regulations. What it means that should there not be a deal by November 12th, the deal that's happening virtually in negotiations in real time, that TikTok will be banned. But immediately, starting next week, on Monday, you're not going to be able to get a new update on TikTok or WeChat, and some transactions on those two apps are going to be banned, Jonathan.
Unbelievable stuff, Kevin. Struggling to keep up over here. I really am. Kevin Cirilli on the latest over in Washington, D.C. Thank you, Kevin. For more on this, Wedbush's Dan Ives running in a note very quickly after this, the following. Freezing TikTok puts sharp teeth into threats by the Trump administration. It could be a Fort Sumter moment in the U.S.-China cold tech war. Dan Ives joins us on the phone for more. Dan, is this a credible threat? And I ask that in all seriousness because this deadline has moved now, and it's moved to November 12th. Do you think this is a credible threat to shut this down?
Oh, yeah. I mean, this is a credible threat. Major shot across the bow at ByteDance, TikTok, and of course, government in China. It all comes down to they need to be willing to accept majority U.S. ownership, which is Oracle and Walmart likely, as well as the source code situation in terms of access. That continues to be the big issue here. Look, this is all a game of high-stakes poker, but now it looks like clock could strike midnight Sunday night, and I continue to view this as a bargaining chip to put more pressure going into this weekend.
Except that's the problem, Dan. The clock doesn't strike midnight this weekend. It strikes midnight November 12th, supposedly. Dan, all that happens going into the weekend afterwards is you can't download the app anymore. And Dan, that's why I ask if this is a credible threat, because I thought that after September 20th, if we didn't have a deal, that the president stuck by his word that TikTok wouldn't be available in the United States, but it will be, won't it?
It will up to November 12th, but I do believe going into September 20th is the line in the sand. Because if an agreement's not struck by then I believe this thing really sort of falls apart and starts to take on a much more contentious tone, which is why ultimately, take a step back, Microsoft could not acquire TikTok because the algorithm was not for sale. And I believe that's the big issue here from a CFIUS perspective in terms of the source code access for Oracle to get, as well as the majority ownership.
Not lost on anyone that this will take place after the election, potentially, Dan. That's another story. Here's my question for you. Let's assume they did, for the sake of this conversation, let's assume they did ban TikTok, November 12th, gone. Are you uncomfortable with any of your longs with US big tech with exposure to China?
No, and I just want to hit on, right away, Apple, the poster child of the U.S.-China tensions. I do not believe WeChat is banned on Apple iPhones in China. It's important, and I think it's a contained risk here in terms of retaliation. But ultimately, from an investor perspective, you want to see the Oracle deal get done with TikTok. If this is sort of ratcheting up of tensions, that's why I call it Fort Sumter moment, because there could be more retaliation, although I continue to believe the bark's worse than the bite when it comes to Apple, and we've seen it over the last year and a half, given just how strategic they are in China.
Dan, great to catch up. Really brilliant to have you on the program on that breaking news. Dan Ives there of Wedbush. With us now for more is BlackRock's Mike Pyle. He joins us right now. Mike, great to catch up with you, sir. Just your view, just quickly, on this tension between the US and China and what it means for you and your strategy at the moment.
So we've been paying attention to the growing drumbeat of tensions between the U.S. and China centered in these technology spaces over the past couple of months. That's a big reason why we pulled back our tactical call on East Asian equities to neutral in late June, kind of seeing these risks as likely in the months ahead, and an ingredient in why we've been more cautious on some of the U.S. exposures as well.
Mike, I know you're very, very aware of some of the binary events on the horizon. Can you give us more color on how you're navigating them at the moment?
Sure. I mean, certainly the U.S.-China dimension is an important one looking ahead. But in some ways, we think that the even bigger implications for the U.S. tech sector in particular are going to be around the election. I'd say in two ways. One, the fiscal policy differences between, just to take worlds where Vice President Biden were elected, for example, the difference between a fiscal policy scenario where Vice President Biden wins with Democratic control of the Senate and where the Senate remains in Republican hands is, by our estimation, 5 percentage points of GDP or more. That's a dramatic divergence between a pretty strongly reflationary scenario and one that looks quite a bit different from that. To us, that has very profound asset allocation implications and implications that very much include the tech sector.
We'll build on that then. The regional bias towards Europe at the moment, is that grounded in European hopes or US fears?
So I'd say that's really grounded for the time being more in European hopes. And indeed, I think some of that positivity in recent months has manifested itself in the strong euro that we've seen. But I think we continue to think that the policy response in Europe, despite maybe a little bit of undershooting by the ECB a week ago, kind of continues to look strong. And over the next year, their public health response is going to pave the conditions for a strong restart of activity there. In the U.S., again, I would just sort of emphasize that this kind of divergent scenario to us, people talk a lot about the growth value rotation. I think one of the important things at stake here is perhaps less that and more the large cap, small cap rotation. In a more reflationary scenario, we could see a much more bottom-up performance, we think, in small cap, equal-weighted S&P. These are pretty big decisions that are going to be coming to pass for investors, and the fundamental environment is really going to shape that.
Interesting how you're also thinking about credit versus equity at the moment as well, Mike. Where'd you come down on that at the moment?
Yeah, so for the time being, we continue to have a preference for credit over equity. Say a couple things. In general, we're pro-risk because we do see the restart having surprised to the upside, even with some cracks in the data over the last week. And net see the global policy impulse is still quite supportive. But there's still some embedded value in credit that hasn't rallied to quite the same extent, especially in high yield, that we've seen on the equity side. And we think there's still room for a bit of a catch-up trade on the credit side that leaves us positioned there.
Mike, it's been really interesting to see the price action over the last several weeks as tech has fallen out of bed stateside. Treasuries really haven't broken out of that very tight range, slap bang in the middle of it at 70 basis points. I know you've been thinking about this at BlackRock, spoke to several of your colleagues about it. How are you considering the other side of the barbell, so to speak, and what should be on it? You've walked through risk and risk assets. What goes on the other side?
Yeah, I think that's exactly right to point to that. We think one of the key changes about the current environment, as you've described the price action in recent days and weeks, but also looking ahead over years, is that traditional nominal government bonds just have much less capacity to provide cushion and ballast in portfolios looking ahead as they have had in the past. We think that investors kind of particularly kind of sitting where we sit today would be kind of well advised to begin thinking about kind of reallocating some of that bond position into places like inflation-linked debt, where the benefits of that we think are perhaps somewhat outsized versus history, and the costs of doing that are a lot less given the diminished value of nominal bonds.
Hey, Mike, it's good to see you. Send my best to the team. Have a good weekend, won't you? Mike Parr there of BlackRock. Coming up on this program, the analyst action you need to know. That'll be next in our morning.